ITC. In the previous class, we have completed some aspects of ITC, especially for availing the ITC, what are the conditions you have to fulfill and all. Okay, section 16 is all about conditions for availing ITC, and section 17 is all about apportionment of credit and blocked credit case. Apportionment and blocked credit case. Meant and blocked credit. And we need to understand the availment of ITC in special circumstances, special cases. Now, C, supplier, recipient. Okay, whatever the goods supplied by or services supplied by supplier to the recipient, value being 1000, GST on this being assumed to be 180. Or can use this common supply for his business purpose and non-business purpose, and again business purpose for exempt supply. This is taxable supply. Assume that around 40% is for taxable supply, for business supply 25%, and 35% for it's a non-business purpose, means personal purpose. In case of non-business business purpose but supplying exempted supply, in this case ITC can be available only to the extent of 40%. Okay, to this extent of this one on your tax payment. For this not available. As per section 17. Hope you will be now able to understand this. Provided as per the condition given under section 16, he can get it. For that, R should be a registered person, should not be composition taxpayer. In this case, this amount will be credited to his electronic credit ledger. Clear? Only to this extent, 40%. 72 rupees will be credited in his book, ITC. Clear? Not only that, this supplier has to pay this 180 rupees. Okay, this 180 rupees to the government of India. 180 rupees should be paid by supplier to the government. So all the marking in blue color representing the conditions. Condition number 1, only for the registered person, this may be automatically credited to electronic credit ledger. And condition number 2, it should be deposited by the supplier to the government of India. And condition number 3, goods should be received. Condition number 3, received. Goods received. Okay. Goods received or supply received. Okay. And In case ITC claimed, then you will not be eligible for claiming the depreciation component on that extent. These two are not matching. Okay, 1000 rupees, ITC 180, 1180. Assume 10% depreciation on this means you can claim the depreciation only on 1000. Okay, if you don't get the ITC, then you can claim the depreciation on 1180. Hope you will be now able to understand. And supplier should furnish this detail to the government of India. Okay, so uploaded by supplier. Not uploaded, then not eligible. Not uploaded means the document should be uploaded while filing the return. Then claimable, else not claimable. Else not claimable. If the document is not uploaded, then recipient can demand, sir, he has not uploaded. So it can be mismatched like, and you can intimate and claim it later. The latest by you can claim it by whichever is earlier of 30th day of the financial year or annual return filing date. Okay. Maybe annual return. Okay. Annual return filing date. It is not due date. Due date is usually 31st December. If he files ahead of that, so that date or 30th November, between these two, whichever is earlier, within which he can claim the ITC also. And condition number 4. Condition number 3, there should be payment, goods received or supply received. Condition number 2, payment should be done by supplier to the government of India. Condition number 4, required documents should be uploaded by the supplier. Based on that only R can claim. And while claiming, R should give what? R should give tax invoice, debit note or some other tax document. Okay, like a bill of entry in case of import. Is that clear? This is the 5th one. Now, so 5 aspects you have to understand. Apart from that, few more conditions. The payment for this 1180 should be made within 180 days from the date of supply. 180 days. Else he has to refund. With 18% interest on that as output tax. If he fails this, then automatically this gets debited in electronic liability register. And the interest on this probably 5 rupees. Assumed. 72 should also be repayable and 5 rupees should also be repayable. This will be output tax like, and this 72 can be payable using the electronic credit ledger. This 5 rupees can be payable using electronic cash ledger. And he can re-avail once the payment is done. Re-avail the moment when he settles this amount. Failing so, on payment, he can re-avail this. These are the conditions we studied. Especially, we have covered the apportionment of credit also. What happens in case of blocked credit? If supplier supplies to recipient, what? In case the supply being motor vehicles, less than or equivalent to 13 passenger including driver, and aircraft, vessels and all. Apart from that, services related to this also be disqualified. Even hiring service also be disqualified. Not only this, we have food, catering and other services like cosmetics, plastic surgery and camp, beauty treatment, outdoor catering and life insurance, health insurance. Okay, all these things are also be disqualified. This will be a small segment. Provided similar further service if it is rendered by recipient, means recipient purchases the motor vehicle and sells the motor vehicle for an additional profit, then recipient can enjoy the ITC. Or if he purchases the motor vehicle aircraft for his business directly linked with that, like using it for training the students for driving or pilot service, then he can avail. Or if he is using it for passenger transport services, he can enjoy. In case of goods, no problem, especially vehicles. Hope you will be now able to understand. These are the cases we have studied. Now, sir, what happens, sir, if the goods lost, stolen? Do I want to refund? Yes, of course, you have to refund the ITC availed. Okay. If the goods lost, not used for the proper business purpose, you have to refund this also. Okay. If the goods given as gift without consideration are lost or stolen, then in these cases, no other way, ITC availed should be refunded, because you are not aware about that the goods is going to be lost or not, because it is not used for the supply related to the business, which is taxable. Only if the goods used for the taxable supplies is able to enjoy, but if it's not for the taxable supply, is not able to enjoy this. Clear? Hope now you'll be able to understand the broader outlook of the content we discussed in the previous class. Let's now start with the special cases, 18th. Special cases. Before I go further, what happens in case of apportionment, especially work contract for constructing the building, as well as any immovable property? Why either you pay to the work contractor, he does the job on behalf of me, or I can purchase the materials and construct the immovable property my own. In those cases, ITC is not available. But I purchase for both the purpose. What happens then? Then apportionment will be done. The apportionment is guided by the government under prescribed model. So with that, all the concept is over. So you have to understand what is called plant and machinery. Already we studied immovable property. For any immovable property related input services, goods or capital goods, you are not eligible for the ITC except plant and machinery. Then you have to understand what is called plant and machinery. So plant and machinery is given under explanation content. Okay. Means apparatus, equipment, machinery fixed to earth by foundation or structural support. See, if I want to install a big plant, in case of cement factory, plants are going to be installed. For that, they need to have the civil structure also. Without that foundation, you cannot install the plant. Then that construction of the civil structure is also forming part of the plant. Okay, that are used for making outward supply and include such foundation and structural supports, but excludes what? It should not be land and building, structural support, that's support, right? But it should not include land and building or other civil structures. Telecommunication towers, pipeline laid outside the factory premises will not be applicable. Okay. Capital goods include plant and machinery. Okay. Okay, that's all. Now, exempt supply, the aggregate value of exempt supply shall not include or exclude interest and discount for trade credit, transportation of goods by vessels from the customer station of India to place outside India. These things will not be addable. Interest will always be excluded from the aggregate turnover. And if you are exporting to the foreign country, from the Indian customs station to foreign country, whatever the amount you pay for the transportation, that is also not considered for the valuation here, means aggregate turnover. Clear up to this point. Okay, it is linked with Customs Act. You just understand this extent more than enough. Now, what is called zero rated supply? Export supply or supplies to CES unit or CES developers will be called as zero rated. Right. In case of nil rated supply, it represents exempted supply. Hence, ITC is not available. Already we studied. And for the banking company also we have studied. So they have the two options. Either they can proportionately claim, or they can adopt manner 50% ITC can be claimed and forget the remaining portion. These are the two options are there we have studied. That is as per rule number 38. Anyway, we incorporate all these things with the main section itself. Straight away we will now go for section 18. Section 18 case predominantly is for what? Registration related. Okay. So if I register first time, okay, I get the registration certificate only sometimes later, and the date liable for registration to the date getting the registration certificate. No, how can I consider for the tax invoice and ITC receipt? That will be guided under section 18. If my registration is getting cancelled, as on the date of cancellation, whatever the input and input goods and input input goods in work in progress and finished goods and capital goods I have to intimate, and on that any GST I have no should be refundable. If the cancelled registration is revoked subsequently later on, how can I re-avail? That also be discussed under section 18. Clear? Let's start here. ITC in special circumstances, newly registered person. Already we covered this. What's that? If the person applies for registration within the date specified in registration section 25, okay, if he applies within 30 days from the date liable for registration, the effective date of registration could be the date liable for registration. From the date liable for registration to the date for registration, mean granting the registration certificate, you might have issued the bill of supply. Instead of the bill of supply, you can now issue the fresh tax invoice called as revised tax invoice. Based on the revised tax invoice, you can claim ITC GST from the customer, and any purchases you do after that date, you can also claim the ITC, means ITC also. And as on the date of application of registration, whatever the stock you have, maybe stock of raw material, stock of raw material contained in work in progress and finished goods, you can claim the ITC on that also. See, you understand the logic. Let me explain here this concept. This is very, very important concept. Now, so A to B, 1000 rupees and 180, and he is being unregistered person while purchasing. Sometimes later, exactly on 1/1/2026, he is eligible for registration, so I applied for registration. While applying for the registration, effective date of registration, EDR, effective date of registration, on the date, he has to mention the before the date, the evening of the before date, okay, earlier date. He has to mention out of this purchases how much stock he has. So he says, sir, 1000 we purchased, out of that 300 rupees worth of stock, and on that 27 rupees, how much? 18 means 36, 54 rupees GST is there. Another 100 rupees worth of stock is contained in the work in progress as well as finished goods, for that 118 rupees. You have to mention that this is the stock I have as on the date of application or effective date of registration. Okay. Then after you get the registration, you can claim the ITC once the registration certificate is available. Clear? Similarly, while cancellation, what happens? The moment you get cancelled your registration, you have to intimate all the stocks you have, and any GST applicable on those unsold stock, you have to refund. You are eligible for availing, there you have to refund. Okay. Now, newly registered person. Conditions and restrictions. It applies for registration within 30 days from the date on which he becomes liable for registration. Okay, only this case it is available. ITC available on inputs held in stock, inputs contained in semi-finished goods and finished goods on the date immediately preceding the date from which he becomes liable to pay the tax. Clear? Hope you'll be now able to understand. Now what happens, sir, in case of voluntary registration? So I do voluntary registration under section 25. I am not required to register under section 23 yet. I may go for voluntary registration. Can I do so? Yes, of course I can go for registration voluntarily. In this case also, before the date, registration, application of registration before the date, you have to intimate what? Stock, inputs held in stock, input contains in semi-finished and finished goods on the date immediately preceding the date of grant of registration. And after showing that, once you get the registration certificate, you can get the ITC on those stocks, Now, in case of composition levy, all these are same, but you have to note this point carefully. What's that point? In case of composition levy, what are the things we have? Input stock. Input stock available as raw material or contained in work in progress and contained in finished goods. Okay, here also. But in this case, yes, this is also okay. Apart from that, capital goods, if he has no, for that also any GST paid to the extent he is eligible for claiming can enjoy the ITC on that. Okay, very interesting. This is applicable only for whom? Composition levy scheme. Okay, composition levy scheme ceased. It means you are being the registered person already under composition levy. Now this composition levy is cancelled. You go for the regular registration, registered person. He is also being registered person, composition levy scheme. Now he becomes composition registered person in the regular case. Then he has to intimate earlier to the date of grant of registration the raw material as well as raw material stock or raw material stock contained in work in progress as well as finished goods. Not only that, he has to state the capital goods stock also. In case of capital goods stock, probably you may have say 5 years or 10 years usage life. Now, before you get regular registration, you might have used for 1 year and you availed it. So, supplier recipient, he purchased 1 lakh rupees worth capital goods and GST paid on being 18,000 rupees. He is being the composition levy person. So, ITC not available. After 1 year, okay, after 11 months, composition levy is ceased and goes for the regular registration. Then he has to intimate, then he is eligible for claiming the ITC, but not the full value. For every quarter of usage of this asset, 5% can be subtracted, balance is able to enjoy. For 11 months means you have completed 4 quarters. You have to round up to the full quarter. Even if you use 1 day, it will be considered as 1 quarter. So 11 months means 4 quarter, per quarter 5%, for 4 quarter 20% will be subtracted. 18,000 rupees minus 20%, 3,600, 14,400 ITC will be available. This will be available only for whom? Only for the person who was already being registered but composition. Now he goes for the regular registration. Clear? Now, ITC available on inputs held in stock, inputs contained in semi-finished goods, finished goods, and on capital goods. That will be additional point here. On the date immediately preceding the date of grant of normal registration, provided that the credit on capital goods shall be reduced by 5% per quarter. Balance you can enjoy. And if you are being the registered person, the last one being, if you are being the registered person, shall I move on to the last one? So, if you are being the registered person, supplier, recipient, who are you? Registered person. You purchased 1,000 rupees worth of goods and GST paid on being 180. Now, you are being the registered person, you are eligible for ITC provided your supply being exempted supply. As you are being the rendering exempted supply, ITC is not available. Suddenly, sometimes later, government announces no more, this will be exempted, hereafter it's taxable supply. From 1/1/2026 until that period, it was not taxable. On 1/1/26, it becomes taxable. You might have heard about there is lots of reformation in GST, lots of rate cuts. You heard this now currently. Before the rate cut, almost it may be taxable at the rate of 28% also, it brought to 18% like. So now there's a lots of benefits. Understand? Similarly, sometimes they may levy the tax for the exempted goods also. Suddenly on first January 2026 onwards, they levy tax for the exempted goods. Earlier exempted, now it's exempted, I mean taxable goods. As you are rendering the exempted supply, you are not eligible for the ITC, but if you are rendering taxable supply, then you will be eligible, provided you purchased when you are rendering exempted supply, but the stock remains unused after getting the taxable supply category. In this case, whatever the stock you have as on this date, 1/1/26, probably 400 rupees worth of stock available with you. Then for this 400 rupees, whatever the GST you paid, you can claim the ITC. Not only that, capital goods also eligible. Okay. So C and D, in these two cases, what happens? Here stock, here stock, here stock and capital goods, stock and capital goods, and here stock and capital goods. In case of capital goods, you have to subtract 5% per quarter. So exempt supply becomes taxable supply applicable for existing registered person. Existing registered person. ITC available on inputs held in stock and inputs contained in semi-finished or finished goods and on capital goods that will not be available for the earlier two cases on the date immediately preceding the date on which exempted supply becomes taxable, provided the credit on capital goods shall be reduced by 5% per quarter. So these two are same and these two are same. Clear in special circumstances. It is for the application of registration. Now, what happens? Fourth one. It's the inverse. Okay. You are being the registered person. Now you become composition levy scheme person. If you are being the registered person, you might have enjoyed the ITC, but if you are being the composition levy, you will not be eligible for ITC. But you earlier being the registered person, you enjoyed all the ITC. Now you become composition levy means you have to refund that. You have to refund. On what? Raw material, the same. Raw material and capital goods. Okay. Where the supply becomes wholly exempt. In what are the scenario? In reverse case. When registered person becomes composition supply, okay, registered person to composition levy, or taxable supply to exempted supply. Okay, in these two cases, ITC availed on inputs held in stock, inputs contained in semi-finished finished goods and on capital goods by on the day immediately preceding day of exercising the such option or the day the supply becomes exemption. Okay, by electronic credit ledger or electronic cash ledger, you have to refund, provided in case of credit on capital goods shall be reduced by 5% per quarter. The same condition will be applicable. If there is any balance left in electronic credit ledger, you cannot use it for any purpose. It will be lapsed only. Okay. So what you learned there, here it's just reversed. Now, ITC not available after expiry of 1 year from the date of issue of invoice. You got the tax invoice, but you failed to claim that within 1 year. Thereafter, you don't have the option to claim at all. And A, B, A closed and A merged with B as a going concern. What happens in this case, sir? In the electronic credit ledger of A, already there is a balance of ₹1000. Then this will be now transferable directly to B's electronic credit ledger. They can enjoy. In case of sale, merger, demerger, amalgamation, lease or transfer of unutilized ITC by the transferor to the transferee, third point. Okay. Okay. The amount refundable, all these things are calculated as per the prescribed method. Last point. Okay. Now, what happens? A supplies the goods to B, B supplies this to the customer. Clear? So B can purchase goods, capital goods, capital goods, okay, from X. Usually what will be supplied by B? Only goods. Purchasing the goods is called purchases, selling the goods is called sales. Purchasing capital goods is named as asset and named as capital goods only. Now the question is, will he sell this now? Usually his intention is not selling the assets. The assets is used for manufacturing the finished goods and finished goods only sellable. Not necessarily the same happens. Sometimes later the asset may become old or not usable hereafter. Then he can discard that asset. We can now discard the asset. What is that? Capital goods. What happens in this scenario, sir? He should not supply the capital goods. He is not being the seller of the capital goods. He is seller of the goods only. Using the capital goods, he converts the goods into the finished goods, and that finished goods is sellable, but the material, the asset he purchased, no more used or scrap, he wants to discard. Can he discard? So, yes. Whatever the thing comes into the business, ITC avail, that should not go out without ITC. That's the logic. If it goes outside without even single consideration, also be supply, also be considered a supply. So, if the capital goods comes inside, you avail the ITC on transfer. So, at the time of receiving, you avail the ITC. Capital goods should be used for manufacturing taxable finished goods. Else, the capital goods you purchase the next day, you feel it is not worth, you want to discard. There are lots of cheating may happen. A purchases the asset for B, probably A, and AC is purchased for rupees 1 lakh. GST on this being 18,000 rupees. B does taxable supply, and based on that, this 18,000 rupees is purchased. Next moment, B transfers this AC to his residential house for his own personal room. If he directly purchased from A, he has to pay how much? 1.18 lakhs. Routed through is the cheating only, no. So whenever he gets anything inside and ITC is claimed, it should be used only for the taxable supply. Here capital goods comes inside and ITC avail, but now the capital goods is transferred similar to the situation. Sixth provision comes. As per the sixth provision, ITC availed minus what? 5% per quarter should be refundable, or tax on transaction value. What is called tax on transaction value? The capital goods purchased for 10 lakhs. Today you are selling after the usage for 2 lakhs. Scrap, second hand like. What is the GST applicable on this 2 lakhs? That is called tax on transaction value. And ITC availed while purchasing the asset minus 5% per quarter. Compare these two, whichever is higher should be refundable as an amount. You understand? If you are paying this as an amount, then it is called non-refundable. Non-refundable. If I pay this being the tax, the person who purchases the goods from me can avail the ITC. But if I pay this amount, government says it is not going to be refundable, government can take directly. Okay, that's the logic. You have to understand the term tax paid, amount paid. Pay an amount whichever is higher of ITC taken and minus 5% per quarter or part thereof from the date of invoice, and tax on the transaction value of such capital goods. Between these two, whichever is higher. However, in case of refractory bricks, but this will not be applicable for what? Refractory bricks, molds and dies, jigs and fixtures, when these are supplied as scrap. If you are supplying these things as a scrap, the first condition will not be applicable. Only person can pay the tax on the transaction value. All these things are scraps only, no. Further, how can I calculate, sir? ITC avail minus 5% per quarter. There is no such possibilities. Because of that reason, you have to pay the tax on transaction value. Is that clear? So these are the special cases also you have to understand. Now, Conditions for availing ITC in special circumstances, already we studied. Okay, filing of electronic declaration, giving the details of all these things, stocks and all, and ask them to refund, that's all. Provided if the refund of ITC is more than 2 lakhs, you have to prove that you have all this stock by getting the certification from CA and CMA, okay, cost accountant or chartered accountant, right? And declaration has to be filed within 30 days, becoming eligible to avail the credit. So once you are eligible for availing the credit, within 30 days you have to apply for. Eligible for apply means, avail means the date of registration. Now, this will be the reverse case. Actually, this one is not going to be studied here. It is already linked with where? Registration. Especially in section 29, I told you on cancellation, he has to reverse that. So it's only the reverse things what we have done here. This section 18 deals with what? Availment of registration in case of regular registration or conversion of composition to regular registration or conversion of exempted supply to taxable supply. Similar happens in case of cancellation of your registration or your taxable supply becomes exempted supply. In that case, you studied under section 29. But while teaching you section 29, told you I interlink with the ITC here. So I gave this one also in this topic. Okay. Special circumstances leading to reversal of credit. While reversal, you have to do what? Payment of amount. Payment of amount. Okay. Here already we studied. This is what about? Composition levy to regular registration. And taxable supply becomes exempted supply. Here we studied what? Okay, new registration, voluntary registration, composition levy becomes regular and exempted supply becomes taxable supply. Under the same 18th section, reversal of these two there, but this is not given. Cancellation of registration is not available in section 18. These two discussed where? Under section 29, cancellation of registration. Clear? Come on, tell me what are the things? Okay, non-registered person to registered person or voluntary registered person. Composition levy registered person, he is being the registered person. Okay, under composition levy, and registered person supplying exempted supply. Now this becomes regular registered person, this becomes registered person still but supplying taxable supply. Okay, all these cases are dealt under section 18. In this case, stock, you can enjoy the ITC on stock held. In this case, stock and the capital goods eligible. In case of capital goods, minus 5% per quarter. Balance you can enjoy. Okay, balance enjoyable. Section 18. Under the same, this is the first point. Under the same, reversal we discussed. Registered person, regular person to registered person becomes composition levy, and registered person supplying taxable supply becomes registered person supplying exempted supply. In this case, the same will be reversed. Here, amount has to be payable. In this case, avail ITC. This scenario, pay amount. Clear? All these things dealt under section 18. Now, under section 29 and section 30, what happens? Registered person cancels his registration, becomes unregistered person. Okay. So this component is linked with what chapter? Registration chapter. Okay. Anyhow, almost this side we have 4, this side we have 4. See here. Registered person switching himself for a composition scheme or supplies a registered person getting wholly exempted from tax or cancellation of registration. Okay. One is shifting from regular to composition, registered person to unregistered person. These are the two scenarios. In this case, what happens? You have to reverse. You have to reverse. Reversal of what? Stock contained, stock as well as input contained in semi-finished, finished goods and also capital goods. That's very, very important. Okay. And of course, again, you need to get the certification from CACMA. In case of capital goods, reversal on pro rata basis pertaining remaining useful life in months, taking useful life of 5 years. Month, I have seen an illustration, I have discussed an illustration in this regard. For example, A and B being the registered person, purchased an asset rupees 1 lakh, paying the GST 18,000 rupees. He used it for 7 months. Then what happens here? You have to consider the life of the asset being 60 months. 7 months used, still you have 53 months. So, out of 18,000 rupees for the 53 month, you have to refund. You are eligible for claiming only 7 months. 18,000 into 53 by 60, how much is it? 15,900 you have to refund. So, here this is given in which chapter? Section 29 and 30. Okay. In case of here, in this case, stock of course, and stock and capital goods. In case of capital goods, the refundable amount being remaining life in terms of month divided by 60 month. Okay, this extent of the ITC avail is refundable. Clear? Not only that, regular to composition taxpayer in these two cases. Now, supply of capital goods, plant and machinery on which ITC has been taken. Already we discussed. Okay. So capital goods and plant and machinery, you are supplying that. Already we discussed, so you can skip this. And this one also we completed. Unutilized ITC transfer. See, though there we have studied the sections, here we refer the rules. While teaching the section itself, I incorporated the rules, so you don't need to study it separately. Section 86A. 86A and 86B, these two were already discussed along with the payment of tax. Unless the documents related to that uploaded by the supplier, you are not eligible for claiming this, right? And while paying the GST, you have to pay using the electronic credit ledger only 99% of the output tax liability. Balance you have to pay routed through electronic cash ledger. These two are discussed here again. 86A. Restrictions on utilization of ITC. Commissioner or an officer not below the rank of assistant commissioner authorized by him can restrict when believe that the ITC has been fraudulently availed or ineligible. In these two cases, commissioner can ban, restrict to utilize the ITC. You have that in your electronic credit ledger, but you cannot use it. Circumstances. ITC has been availed on the basis of tax invoices or valid documents only, provided which is issued by a non-existent supplier, a bogus supplier, or by a person not conducting any business from his registered place. So if you are procuring from a person, you are not aware about who is he, but he gives a tax invoice. Okay, you based on that you claimed, but the commissioner knows that that person is fraudulent person. Immediately it is blocked now. Okay, you may be the genuine customer, doesn't matter. Okay, without receipt of goods, services or both. Second situation, you try to claim the ITC where you have not received the goods, because you can use the claim the ITC only all the goods received, right? If you are receiving the goods in lot, on the receipt of the last lot only you will be eligible, else you are not eligible for that. And tax in that should be paid by the supplier to the government, else you are not eligible. So all these conditions you have to satisfy it, otherwise your ITC may be blocked. A registered person availing ITC has been found non-existent or not being. This is what about the person who is recipient. In this case, supplier. In this case, recipient. So I am not being the regular person. Okay, bogus document is submitted, he creates himself. So it's again forgery only. The registered person availing ITC is not possession of tax invoice. If he has no tax invoice, valid document, he is not eligible for claiming. If the ITC is so availed, can be restricted. He availed, but can be restricted for a period of 1 year to pay any liability. Otherwise, if there is any liability to pay, you have to pay. Not allowing refund of any unutilized ITC. All these things will be done. And this restrictions can be withdrawn later on if the commissioner and official authorized by him. So once you satisfy, you prove that your genuinity, you can get it refunded. Okay, also possible. That comes under section 86A. Immediately after the GST launching in India, 1 year or 1.5 years later, I think, almost crores and crore rupees cheated, manipulated using the bogus tax invoices. So I supply to you, giving you the tax invoice. Based on the tax invoice, you collected all the ITC. You enjoyed the ITC, but I am a temporary registered person, or I may be absconding after issuing the tax invoice. I have to pay the GST. No, I didn't pay. Supplier, this is how happened. Okay, supplier and recipient. Supplier and recipient. He issues tax invoice for 100 crore rupees supply, like, and on that 18 crores. Okay, even I don't get the C here, not familiar with. So lakhs only. 100 crores and 18 crores being the GST. 18 crores being the GST. This 18 crore becomes is ITC. The tax invoice is issued by whom? Yes. Who is he? Now we are not able to trace. He gave the tax invoice in abscond, and our demands this amount being claimable from the government, he enjoys this. Immediately they introduced this rule 86A. Whenever there is a B addition to the regular section, it's the latest sections. After this fraudulent practices, this 86A and 86B came. Do you know who has done this? Only chartered accountants. The brilliance began. Okay. So if you go and see the newspaper, with the bogus tax invoices who got arrested, so you'll see the chartered accounts some X and Y. Okay, that's how they did. So R gets all the ITC and uses this for the tax payment, and he swindles, and the person who gave the bogus tax invoice subscan. This is the reason now making the supplier compelled to pay this 18 crore to the government to get it, and he has to upload the document. You understand why these two comes? Okay. The tax in relation to which has not been paid means he has to pay only then claim, and documents should also be uploaded. That's what about the section 86A. Now we'll go for the next section. Rule number 86B. Restrictions on the use of amount available in electronic credit ledger. How much you can use? Only to the extent of 99%. Only to the extent of 90%. Cumulatively for the year. For this also we have studied that illustration along with the tax payment. Okay, tax payment. Cumulatively. It's not every tax period for the year. Last year we paid almost 15% using cash ledger. In this year I can use the complete electronic credit ledger for the payment of 100% output tax, no problem. Section 86B overrides the other provisions. Overrides means all the other provisions states that you can use the electronic credit ledger to pay the output tax still. If the 86B is there, no, this is the predominant section. You have to follow this one first of all before applying the other sections applicable. Registered person having the value of taxable supply more than 50 lakhs in a month. If his supply value is more than 50 lakhs, only for that case this is applicable. And taxable supply not include exempt supply and zero rated supply, that you know. Taxable supply is 50 lakhs and taxable supply 50 lakhs means it should not include exempted and zero rated. But nil rated, okay. Exempted supply and zero rated both will not come, including the nil rated also. Right. Restrictions. What is the restriction? ITC can be utilized to the extent of 99% of the output tax, and balance is payable using electronic cash ledger only. Is there any exception, sir? Yes, payment of income tax more than 1 lakh by the registered person. If I am being the registered person paying the income tax itself more than 1 lakh, so this condition is not applicable. Or receipt of refund of unutilized ITC of more than 1 lakh. So whenever I have the chance to get it refunded with the ITC being more than 1 lakh, on account of zero rated supply without payment of tax, or on account of inverted duty structure. In these two cases, zero rated and inverted tax structure. Exempted and nil rated are same, zero rated is different. So zero rated means I can enjoy the ITC, but output tax is zero. Because of that reason I can get it refunded. In this case such a provision is not applicable, you can get it refunded. And inverted duty structure. So input tax is higher than the output tax. In that case also you can get it refunded. In these two cases this provision is not applicable. And not applicable for the government department, public sector undertaking, local authority and statutory body. And payment of total output tax liability through electronic credit ledger in excess of 1% of total output tax liability up to the set month in the current financial year. Okay. This payment, at least 1% is not for every tax period, it's for the whole financial year. We have studied the illustrations along with the payment of tax chapter, so we can skip here. How can you reverse this tax? That's what about rule number 44. Okay. You can study later. Okay. See, you calculated how you are going to refund. Well, refund, you have to consider this being the amount, that's all. Now, there is a clarification related to the demo vehicles. Now, what happens, you know, the supplier, recipient, okay, he sells the car, recipient sells the car to his customer. Supplier sends the car, sells car to R, and R sells the car to customer. Usually for the car, no, ITC is not available. But if he is doing the same business, okay, then ITC is available. But what happens? Recipient uses the car for demo. That's a question raised. This is taxable supply. Customers are coming here, show me demos are only then I will purchase. So we give test drive for. Okay. All the cars given for a demo, driven by various customers as a test. Okay. Thereafter not saleable or saleable at much discounted rate in auction only. Now the problem is, what about the GST paid on this demo car, sir? Can I get the ITC or not? There confusion comes and loss of restriction. Later on, council gave the clarification. Of course, ITC can be available because it is only for the promotion of the product only, without which we cannot sell properly. So it is related to the sale only. It is used for the business purpose. Demo vehicles, motor vehicles for passenger transport with seating capacity less than or equal to 13 numbers including driver are used by the authorized dealer for the trial runs and showcasing features to potential buyers. These vehicles promote sales by helping customers make informed purchase decision. As demo vehicles contribute further supply of similar motor vehicles only, they qualify as being used for such a supply alone. ITC and demo vehicle is not blocked under section 17 and subclass. The provision excludes that ITC restriction. So for this it is available. Dealers can avail ITC and demo vehicles used for business promotion and sales purpose also. It's a clarification. Now one more clarification. This is the clarification number 1 for availing the ITC. There may be some confusion, sir. ITC is not allowed, sir. Why, sir? Then there's a confusion with respect to the act and goes to the court or goes to the council for clarification. The clarification may be now issued now and then. So the clarification number 1 related to ITC being demo vehicles. And in case of duct and manholes in optical fiber cable network, already I told you, no, pipeline laid outside the factory is not, business premises not eligible for ITC, plant and machinery. Any immovable property, ITC is not eligible. Provided if it is being the plant and machinery, ITC is enjoyable. Plant and machinery includes whatever it may be, but excludes pipes and telecommunication network and all. The same problem comes here. ITC and duct and manholes used for OFC network, optical fiber cable, for telecommunication service barred under section this one. Is it correct? Okay. So clarification says without which I cannot supply, sir. So clarification says of course available. Ducts and manholes are essential components of OFC networks, enabling laying, maintenance and transmission of telecommunication signals, essential components. And duct and manhole qualify this being the plant and machinery. In case of immovable property being the plant and machinery eligible. But plant and machinery excludes pipes and other things laid outside the factory. But it is laid outside only, no? How will it be laid within your home or there? It should be laid, routed through the entire, down the earth. They are not excluded under the definition of plant and machinery as they are not land, building, civil structure and not telecommunication towers and pipelines laid outside the factory. Towers and pipelines laid outside the factory. Then the optical fiber cable, no, that is considered as laid outside the factory, disqualified. But it went to the clarification, went for the clarification. Clarification also properly given in favor of the assessee. You can have the ITC. Clear? So with that, I think I have completed ITC completely. We have to go for some comprehensive illustrations. Okay, practical questions. Now, Swastik Private Limited is manufacturer of taxable goods. It purchased machinery for rupees 8 lakhs on which IGST of 14,400 is paid. The company has claimed depreciation under the Income Tax Act 1961 on the full value of the machine, including IGST components, has also availed ITC on 14,400 paid by its IGST. Examine it stand taken by the company. Okay. Purchased machinery 8 lakhs. IGST paid on this being 14,400. And this is IGST paid. ITC claimed on IGST being 14,400. Now, they have claimed the depreciation on this total value. The company has claimed a depreciation under Income Tax Act under 1961 on the full value of the machine, means 8 lakhs 14,400. Now the question is it correct? Once this amount is refunded, the actual cost being only 8 lakhs, you can claim the depreciation only on this as per section 41. Sir, 43. Okay, 43 of Income Tax Act. Shall I move on to the next one? Next question. Sigma Consultants and LLP of finance professionals provides financial consultancy services. It made an advance payment of 1,18,000 inclusive of IGST 18% in the month of October. Azura Computer Services for developing software. The software would be used by LLP to enhance the precision of the financial advice given by it to various clients. Using the software, they can calculate financial performances better and give the advice properly to the clients also. Balance payment is to be made after the successful test run of the software in the month of December. Sigma Consultants has availed ITC of IGST 18,000 in the month of October. Do you think Sigma Consultant can avail ITC? Examine the scenario with reference to the relevant legal provisions. When can we avail the ITC? Only on the completion of the supply of services. Supply of services still pending. It is only advance. During the advance payment, he is not eligible. He can avail only on payment. On the payment. Is that okay? On the completion of service. Currently, ITC is not available. A taxable person is in the business of information technology, buys a car, maximum seating capacity being 5% for use of executive directors. Not possible. Okay, blocked credit. Now, a technical testing agency tests and certifies each batch of machine tools before dispatch by BMT Limited. Some of these are dispatched to a unit in a cess with the payment of GST, as these supplies are not taxable. Cess. The finance personnel of BMT Limited want to know whether they need to carry out reversal of ITC. Can the testing agency services to the extent attributable to cess supplies? For cess supply, no, it is zero rated. In case of zero rated, it can avail, no problem. Exempted and nil rated, not available. Now, AB, a registered person paying tax under composition scheme up to 30th July. However, on this date, AB becomes liable to pay under regular scheme. Is A eligible for any ITC? Yes. Stock as well as capital goods. In case of capital goods, any ITC you claimed minus 5% per quarter. Okay. Bala Enterprises is exclusively engaged in making exempt supply of goods and is thus not registered under GST. Okay. Exempt supply. On 1st October, the exemption available on its goods gets withdrawn, means exempted supply becomes taxable supply. Okay, on the day the turnover of Baba Enterprises 50 lakhs, examine eligibility of Baba Enterprises for availing NDC. Available only for stocks. Only stock, not for the capital goods. Not for the capital goods. Mamta Trade Links trades in exempt goods and provides taxable services. It is registered under GST. On 1st October, the exemption available on its goods gets withdrawn. Okay. So, exempt goods becomes taxable goods. Okay. Now, what happens here? Mamta Trade Links trades in exempted goods and provides. So, he is already Mamta trader, supplies taxable goods as well as exempted services. Okay, exempted goods, taxable services. Now the goods becomes taxable. So if he is rendering taxable supply, definitely he should be a registered person. Now the exempted goods becomes taxable goods, means he is eligible for what? Stock and capital goods. If he is being already a registered person, he is eligible for two benefits, stock as well as capital. Else he is eligible for only one benefit. Now we'll start with this one. ABC company registered under GST is engaged in the manufacture of heavy machinery. It procured the following items during the month of July. Electrical transformers to be used in the manufacturing process. Yeah, of course, it can be used for climbing. Trucks used for the transport of raw material available. Trucks. It's not motor vehicle carrying passenger 13, maximum 13, right? Raw material is available. Confectionery items, food and beverages. These items are supplied free of cost to the customers in the customer meet organized confectionery, food and beverages. Okay, chocolates and biscuits offered. Blocked credit. Okay, determine the amount of ITC available. The amount of ITC being only these three, 8 lakhs 20,000 rupees, 8.2 lakhs. Now, Harsgeet Private Limited registered supplier is engaged in the manufacture of taxable goods. The company provides the following information pertaining to the purchases made, services availed by it during the month of July. Raw material to be received in the month of September being 2 lakhs 50. So we are talking about July month. Raw material to be received in September means currently not available, can be available later only. Membership of club availed for employees working in the factory. If it is not being the legal requirement, not eligible, it is coming under blocked credit. Inputs to be received in 5 lots, out of which third lot was received during this month. Can avail only while receiving the last lot, so not eligible. Trucks used for the transport of raw materials. For the goods, of course, it is eligible. Capital goods, out of the 3 items, invoice 2 items is missing. And GST paid on those items being 80. So you need to provide the documents. You are not eligible for the providing the document for the 80,000 rupees. So you are eligible for only 70. Now, what is the amount you will be eligible for ITC? 1,10,000. Clear? Next. Jamku Limited, a registered person, is engaged in the business of spices. It provides the following details in relation to GST paid on inward supplies procured by it during the month of October. Jamku Limited, registered person. Okay. Raw spices purchase. For what? Sold to customers. Purchase and sale. Eligible for ITC. Raw spices used for personal use of directors. So, this is not for business use, not eligible. Apportioned credit. You apportion the GST paid on raw spices purchase for this portion and this portion. It is already apportioned given. The GST for the raw spices used for personal uses is not available. Electric machinery purchase for being used in the manufacturing process available. This one is available. Motor vehicle used for the transportation of employees generally not available. Generally not available. Up to 13. Payment made to contractor for construction of staff quarter, immovable property. If it is being the plant and machinery, available. If we are making the payment to the work contractor, or if you are constructing your own, in both the cases, in case of immovable property emerges out of that, will not be eligible for the ITC. ITC is not there. Then 75,000. Dina Limited, registered supplier from Maharashtra, is engaged in the manufacture of passenger autos. Company provides the following details of purchases made, services availed during the month of March. Okay. Purchase of iron, which is used as raw material. Goods were received in 2 installments, first in March and second being April. We are in March. We will be eligible for only on receipt of the last lot in April, not this month. Purchase of accessories which were delivered directly to the dealers of the company on the direction of Dina Limited, only invoice was received. Yes, eligible because it's built to ship to model. Though he has not received, yet it will be considered as receipt, so he is eligible for availing this benefit. Okay. Purchase of bus, seating capacity being 15. Seating capacity being 15 for the transportation of employees from their residence to company and back. Seating capacity is 15. Up to 13 is not allowed. More than 13 is allowed. So this is eligible. General insurance taken on car used by executors. Executives, car for executives is disallowed, and services related to those vehicles also be disallowed, like insurance services or repair services, any other services disallowed. Now what is ITC available here? 2,87,000. Clear? Now we'll move on to the next one. This one also be studied along with the payment of tax. Mrs. Diwan Sens of New Delhi has placed an order of 250 kgs of plastic granules, 50 kg at 50 per kg. At 50 per kg. Exclusive of GST on Mrs. Karim Brothers of Noida. Okay. Diwan placed order from Karim 250 kg at rupees 50 per kg. He is in Delhi and Karim is in Noida. Has agreed to deliver the goods at the warehouse of Mrs. Diwan Sons and New Delhi. The goods are delivered where? Diwan Sons warehouse, also being in Delhi. While the order was getting packed at the factory of Mrs. Karim's brothers, Mrs. Diwan Sons got an order from Sukama Sales of Hapur UP. Meanwhile, D gets the order from whom? Sukama Sales. Okay. For the same 250 kgs at rupees 60. D is willing to supply 250 kgs at rupees 60. Okay, in order to save the transportation cost, Mrs. Diwan Sons asked Karim Brothers to directly deliver plastic granules to Sukama Sales. So he immediately makes a call, don't deliver here, deliver straight away from here to there. At its godown located in Hapur. Accordingly, Mrs. Karim Brothers has delivered the plastic granules at the godown of Sukama sales have put directly. Examine the availability of ITC with Mrs. Diwan and Sons and Karim Brothers. Now, what is the GST payable? 250 into 50 on that 18% GST. Come on, tell me. IGST. IGST. Because Noida to Delhi, Delhi to Uttar Pradesh. Okay. Come on, find out the IGST here. 18%. 2250. For D, he has to collect the IGST from Sukama 2700. So for D, you know it's supply like from K to D, D to S. He supplies by collecting the IGST being 2250. For D, he collects 2700, and of course this may be available as ITC. Because though he has not received, it's a bill to ship to model assumed to be received by D and D subsequently sold to S, like so ultimate tax payable by him being 550. Clear? 450. Okay. 450 has to be payable. Now, we'll deal a comprehensive illustration here. Comprehensive illustration. This you have to study with the payment topic and ITC chapter, both put together. Paritos and Co., a supplier of goods, pays GST under regular scheme. It made the following outward supplies in a tax period. Paritos. Okay. So, interstate. Intrastate supply being 10 lakhs, interstate supply being 8 lakhs. It also furnished the following information in respect of purchases made. For that, the purchases. Intrastate purchases 3 lakhs, interstate purchases 2.5 lakhs. 2.5 lakhs. Paritos company has the following ITC with it at the beginning. Okay, this is the beginning details. Rates of CGST, SGST, IGST are 9. CGST 9, SGST also 9. In case of IGST, it is 18%. Both inward and outward supplies are exclusive of taxes wherever applicable. So, these values are not inclusive of taxes. All the conditions necessary for availing ITC have been fulfilled. So, they are eligible for the ITC also. Complete the minimum GST payable in cash. Okay, by Paritos company for the next period. And then ITC can be carried forward to the next month also if any. Make suitable assumptions as required. Now, let's see. This calculation you can better understand by the method I am going to solve here. Right. Find out the GST payable first of all. GST payable. GST payable. He has to pay CGST, SGST, IGST. For this one, he has to pay what? Intra-state supply. Supply being intra-state. For this 10 lakhs, 9% will be payable. 90,000 CGST payable, 90,000 SGST payable. For interstate supply 18% will be payable 1,44,000. 1,44,000. Now overall GST and SGST, IGST payable being 90, 90, 1,44,000. Step number 1. Step number 2 is what? ITC available. ITC available. ITC related to CGST, major head, major head. See, you need to have the major head and minor head, already we studied. With the CGST, you have minor head like tax, interest, other amount. CGST, SGST, IGST. What is the opening value you already have? You have 57,000 in CGST, 60,000 rupees in SGST, 1,40,000 rupees for IGST. For intrastate receipt, intrastate purchase, 9% SGST, 9% CGST might have been paid. So the value being 27,000 for CGST, 27,000 for SGST. For interstate purchase, for this 18% in total. In case of inter, it's a combination of these two. 18% and 2.5 lakhs, 45,000 may be received. All these things are, this will be available in electronic liability register. This will be credited in electronic credit ledger. Electronic credit ledger. Okay. What's the value? 84,000, 87,000, 1,85,000. Clear? We got complete details here. Now we have to find out the payment structure. Third step, payment. For this payment of tax chapter, you recollect for the payment of tax chapter. Otherwise, you finish the chapter and come here. CGST, SGST and IGST. Okay. Dues payable. Dues payable. How much? 90,000 rupees is payable amount for CGST, 90 SGST and 1,44,000. Now pay using electronic credit ledger. In your electronic credit ledger, you have CGST first. You have CGST. Now, IGST, CGST, SGST. How much we have? 185,000, 84,000, 87,000. What is the first order? Those things will be payable to the respective tax first of all. CGST 84 can be used for payment of CGST. SGST can be used for payment for SGST. IGST 185, 144 will be payable for IGST. In this 185, we have used 144. Balance we have how much? 41. This 41 can be payable for the rest. You can go for either GST and SGST. For GST, we need to pay another 6,000 shortage is there, so we can pay 6,000. Here 3,000 shortage is there, you can pay the 3,000 rupees. 6 plus 3, 9,000 is paid, so balance 32,000 still you have. Now what is the balance you have? No balance. No balance here. 32,000 rupees, you have the closing balance still. And after payment, what is the amount payable routed through electronic cash ledger? Dash, dash, dash. You no need to pay through electronic. What? Electronic cash ledger. Everything can be payable using electronic credit ledger subject to the condition laid under section 86A, rule 86A. That 1% and 86B, okay, 1% and all. Clear? So this working you can skip. Understand this. Okay. Output tax. Output tax. First, you have to debit the electronic credit ledger. Second, electronic cash ledger, debit it. Okay. What happens in case of input tax? Okay. On receipt, electronic credit ledger gets credited. Isn't it? You are getting it credited. Using this input tax, when you are paying, then electronic credit ledger is debited. In case of RCM, on payment, you have to pay using electronic cash ledger only. Electronic credit ledger not possible. So by debiting electronic cash ledger, you can pay it. After payment, the same, if it is satisfied, if it is available, then it may be credited to electronic credit ledger. Electronic credit ledger. Is that clear? So before we go for returns discussion, GST returns, we try to finish up some small topics like accounts and records and e-way bill, TDS and TCS. Okay, these are the three small chapters we have. We will finish up this. Accounts and records is nothing but if you are being the GST registrant, what are the accounts you have to maintain and what are the records maintain, how many years you have to maintain, how to maintain. All these things are discussed here. Very simple topic. Where to maintain. Under section 35, every registered person shall keep and maintain at his principal place of business. Who has to maintain? A registered person. Where to maintain? principal place of business, what records, how true and correct amount regarding production, manufacture, inward and outward supply and stock of goods, ITC, avail, output taxes, such other particulars may be prescribed. That's all. Records he has to maintain. That's all. Where he has more than one place of business specified, the accounts relating to each place of business shall be kept in such places and comprehensively in the principal place also. Okay, and predominantly electronic form. Electronic form. Okay, first one. It's a registered person. Second is being, if you are being the in charge, owner or operator of warehouse or godown, you should also maintain what? Okay. Now in this case, whether he is a registered person or not, he has to maintain the details regarding the consignor and consignee regarding the goods. Every owner or operator of warehouse, godown or any other place used for the storage of goods, and every transporter. So he gets the goods of third party. No, he is not required to be the registered person, but he has to maintain all this document. Okay, what goods he gets and from whom to whom it should be supplied and all. It is for warehouse in charge and transporter. Warehouse in charge and transporter. The details be related to the consignor and consignee. Commissioner may notify other things also to be maintained. Okay, some other persons, they need to maintain some additional documents. If it is so, then they have to maintain. Okay. Now, and commissioner may require, okay, not in a position, taxable person is not in a position to keep and maintain in accordance with the provisions of this section. He may ask for the permission and he can be permitted. Sir, I am not able to maintain these documents, sir. Okay. If he gets the permission from the commissioner, he can do accordingly. So, commissioner may notify class of taxable persons to maintain additional accounts. Commissioner may consider not to keep the records. If he fails to maintain that account, person fails to account for the goods and services, and proper officer will say this is the amount of tax you have to pay, then there is no other way, you have to pay the tax under section 73 and 74. 74 is all about the demand notice for the payment of tax. So already we studied now, any demand notice, based on that if the tax is paid, okay, automatically you are not eligible for the ITC. Okay, the demand notice is nothing but the calculations done by the assessing officers themselves, right? You don't have the chance to escape. It seems to be fraudulent payment, so they demand and you have to pay. Is that okay? Hope you'll be now able to, so you will be able to understand section 35. The registered person should maintain the books. Second one being warehouse in charge as well as transporter. Third one being commissioner may prescribe some other persons also to maintain some other documents, then that person should maintain. Fourth, if he is not able to maintain some documents, he can get the permission from the commissioner. The fifth point is all about, if you don't maintain despite the warning given, so automatically the assessing officer will demand to pay an amount calculated for a tax payment. So in that case, you are not eligible for the ITC. Now, some rules. Where to maintain, sir? Where to maintain? Principal place of business, additional place of business, including godown. Okay, these are the details. So there we have studied the BAR Act. Here it's an explanation. Production, stock, ITC, and all these things. Okay. Next, records which are to be maintained only by a supplier other than supplier acting composition levy. If I am not being the composition levy, but I am being the supplier. Amount of stock of goods received and supplied, including opening balance, receipts, supply, goods lost, stolen, destroyed, written off, gifted, free samples, all these details he has to maintain. Okay, amount of tax payable, collected, and ITC claim, all these details. This is for supplier. This is not applicable for the composition levy tax payable. But if I'm not being an agent, sir, what happens? So in case of agent, then you have to maintain what? What are the material you get from your principal and amount of goods maintained and supply made and all these things. Authorization received from each principal to receive supply goods and services. Authorization he has to maintain. Particulars of goods and services received. Details of accounts furnished to every principal. Tax paid and all he has to maintain. As an agent also he has to maintain. Now, some additional persons also be notified by the commissioner. No, records to be maintained additionally by a manufacturer and service provider. What are the additional documents required? In case of manufacturer, monthly production of accounts showing quantity details. That's all. Raw material consumed and whatever it may be, all these things he has to maintain. In case of service provider, of course, production details is not available, right? But quantitative details of goods used in the provision of services and any input services utilized for the specified supply he can maintain. So here output and input both may be in terms of goods, units and values given, but in case of service provider, goods used means he can show that, and in case of services used, that can also be intimated. Services supplier also be intimated. That details he has to maintain. Now, if I am being the work contractor, then what I have to do? Okay, to whom you have done the work, that party's name you have to maintain, and supplier of goods and services from whom you have received. So that detail you have to maintain. Work contractor, if you are being, to whom you are rendering the service, for that whatever the goods you purchase now, from whom you purchase, that details you have to maintain. And separate record to be maintained by a person executing work contract. Separate record for what? He may get 5 or 6 contracts. So he has to maintain the document for each and every contract separately. Details of payment received in respect of each work contract and description, value of the quantity and all these things also he has to maintain. Now, what happens in case of operator of godown, warehouse and transporter? If I am being the transporter, you deposit your goods to be transported, I collect and deposit to the third party. The person who deposits the goods is called consignor. To whom it should be delivered, no, is a recipient or consignee. If I am not being the transporter, I am being running a warehouse for storing the public goods. If you are depositing, then I have to keep that safely and I have to release whenever you ask. So I need to maintain the documents related to the goods here. Okay, I need not to be registered person here. Records of the consignor, consignee and other relevant details of the goods in such a manner as may be prescribed better maintained. Transporter, for transporter, goods transported, delivered, stored in transit, GST number of registered consignor and consignee for each of his branches. If I have 10 branches, I have to maintain all these things for every branches. In case of a godown operator, then what he has to maintain the books of books related to the goods received, from whom received, and what time you received, where you dispatched, movement and all these things you have to maintain. Now, how this being maintained? First is the section, barrack. Subsequently, I am explaining those provisions, that's all. How to be maintained? Electronic form. Predominantly, you are maintaining all these things electronic form, authenticated by digital signature. Okay. And stored in electronic data. Okay. Proper electronic backup. Okay. Now, such records to be produced when it's on demand, and you have to give the password and all these things if it is coming for the inquiry. You cannot erase or overwrite those recorded items. Incorrect entries other than those clerical nature be scored out under attestation of the proper officer. Electronic records being maintained. This is all about physical record. In case of electronic records, a log of every entry. Whenever you enter, no, the time of entry should be there. So what happens, in case of physical form, I wrote sales being 5 lakhs on 1st April. 2nd April, I record another one, purchases. If you want to correct, I don't have the option. Score out and rate this being 4 lakhs. You have to give the attestation. But if you are doing in electronic form, 1/4 sales 5 lakhs, 2/4 purchases 6 lakhs. But you want to correct this. How can you correct? You can go on edit and correct it, no problem. But this one where we can easily find out is it malpractice or not. But in this case, we are not able to find out. No. Because of that reason, while recording, the date and time recorded should be entered or available. Log of every entry, edited or deleted. When you are opening a Word file in your laptop, the date on which you have modified also be there. No. Similarly, that date will be called log date. You have to maintain all these things. Books of accounts maintained manually, be serially numbered. Books of accounts required to be produced on demand. That's all. Okay. Manually or electronically, no problem. If you fail to pay, then automatically section 73, 74 will attract. So the assessing officer will demand this is the tax you have to pay. You are compelled to pay that amount. On payment of that, you are not eligible for claiming the ITC also on that. Section 36 is all about dealing with how many years you have to retain this. The years of almost 72 months. 6 years you have to maintain the documents. Okay. From the due date of furnishing the annual return, means for 25-26, the due date for annual return be 31-12-26. This is the due date for the annual return. From there, you have to maintain 72 months, means 6 years. So 32, 31-12-32. Until that period, you have to maintain the details related to this one. Okay. Where an appeal, revision or any other proceedings before appellate tribunal and all these things, then okay. Court or investigation is going on, anything. In that case, 1 year after the final disposal of such appeal, if there is an appeal regarding this case is with the government, okay, with the court, then what happens? When the court disposes this, the court disposes this case or finalizes by giving the judgment on 1st April 2033. From that date, 1 more year will be addable. So 1 more year means 31-3-2034. Until that period you can keep. If the judgment is given beforehand, so you have to compare judgment date plus 1 year or 72 months from the end of the due date for annual report. Between these two, whichever is earlier will be taken. Whichever is later will be taken. Okay. With that, this one is over. We'll resume the e-way bill under section 68. So e-way bill is nothing but the document that you need to have, while transporting the goods in vehicles, right? For the cross verification. So you might have seen in toll gates, lorry may be stopped and investigated what are the goods inside. They have to state what are the goods there, and they have to give the supporting documents like the tax invoice or bill of supply, delivery challan and all they need to maintain. Now this one is automated, electronic form. Before you start your transport, you need to update what's the goods value transported, from where it is transported, to whom it is going to be transported. Every document will be uploaded in electronic form, which is called e-way bill. Okay. Way bill. Okay. Way bill. That's all. Electronic way bill. So because of that one, no. During the check post, the inspector may know what item may be available in this transport vehicle. So usually they will not now go for verification unless they will get any suspicious information. There may be any cheating things happening or violation, fraud and smuggling happens. Only then they can detain, else they cannot stop the vehicle. See the number, already this detail is uploaded in the e-way bill, they have to send it alone. So quicker transport will be available. Inspection while transport will be reduced, traveling will be reduced. That's what about the advantage of e-way bill. When to submit, how long that e-way bill is valid, all these things are going to be studied here. E-way bill is an electronic document generated on the GST portal evidencing the movement of goods. So from this it is very clear, it is only for the goods, not for the services. Benefits: elimination of state boundary check post. It is not going to be inspected now and then in the check post, right? Because while seeing the number of a lorry itself, right, you can very easily track the details what is available there. Facilitate faster movement of goods and improve turnaround time of trucks. Turnaround time means to and fro time. Okay. So as there is no inspections in the check post, it will go to the spot easily. So it reduces time. When to generate that? E-way bill is mandatory in case of movement of goods where the consignment value is more than 50,000 rupees. Consignment value is more than 50,000 rupees, mandatory you need to have the e-way bill. And what about the consignment value? You already studied the aggregate turnover, right? Aggregate turnover excludes what? GST. But in the case of consignment value, it includes GST also. That's what about the consignment value. If the commodities value including the GST is more than 50,000 rupees, you have to mandatorily generate the e-way bill. So consignment value determined in accordance with the provisions of section 15. The value is determined as per section 15. We have already studied value of supply. There we calculated and added all the costs incidental for the supply of goods is added, and this is the first method. Or any value declared by the supplier in invoice or bill of supply or delivery challan. Main thing is it includes GST. Okay, but this will not include exempt supply. Exempt supply will not be includable. Okay. Where supply includes exempt and taxable, you have to remove the exempted. But in aggregate turnover, no, you have what? Exempted supply also. For the consignment value, exempted supply is removed, but you have to add the GST value. Now, movement what? Okay. See, you are taking 5 lakhs rupees worth gold chain from your home to another state as a tourist. Is it coming at a movement of goods? No. It's for your personal consumption. But the chain is transported from Trichy to Bangalore by a jewelry dealer X for sale. Then it will be considered as movement of goods. So in relation to a supply, first condition, sometimes other than supply also. What about the other than supply? Sending my goods for the exhibition. I am being the artist, I am sending the goods for displaying in the exhibition. It is not actually supply, but my intention, if there may be a chances of supply. So I am moving the goods not for supply, then I have to give that delivery channel. In case of movement along with that means meant for the supply, you will have the tax invoice. If it is not being a movement to be due to the supply, then you have to give delivery channel. Due to inward supply from unregistered person, but if you are getting it from somebody else, okay, it's inward supply. In that case also it is considered as movement of goods. So you have to prepare the e-way plan. Who has to prepare? A registered person causing movement of goods. Who is responsible for moving the goods is the responsible for paying the preparing the e-way bill. Furnish the information relating to the said goods in Part A, Form EST, GST, EWB 1. GST, EWB 1. Okay, Part A of Form GST, EWB 1. Before commencement of such movement. Now, e-way bill is needed even consignment value is less than 50. Usually, if the consignment value is less than 50, okay, not required. If it is less than or equal to 50, also sometimes e-way bill is needed. Okay. Clear? When? If the movement happens, interstate transfer of goods by principal to job worker. If the movement from one state to the another state between the principal to job worker, the consignment value is less than 50, yet you need to create the e-way bill. Interstate transfer of handicraft goods by a person exempted from obtaining registration. Okay, a person exempted from obtaining registration, for him also that e-way bill is generated. Already you know that handicraft goods supplier not required to register. As he is not required to register, he doesn't know how to create the e-way bill. Then how can we now asking him to apply the e-way bill? Very simple. The transporter will take the responsibility. Okay, the lorry drivers, okay, may be responsible for uploading the e-way documents. Person causes movement. If the registered person undertakes to transport the goods, supplier, recipient, and supplier being the registered person. For example, Amazon. Amazon is a registered person, you order these goods, right? And Amazon sends the goods to you through his own transport mode. Then who has to generate? Amazon. Okay. Suppose supplier, recipient being, okay, LNG, LG, we can assume this is being LG. And supplier being a lorry driver, unregistered person. With his own old lorry he transports. As he is not being the registered person, and he himself arranges the transport facilities and to deliver it from supplier to recipient, then R will be the person causing the movement of goods. Okay. So if the recipient arranges the transport, if the supplier arranges the transport, then supplier he himself being the person responsible for movement of the goods. If the recipient arranges the transport and he is being the registered person, he is going to be the person causing the movement of the goods. Right. And registered recipient, in case unregistered supplier supplies to registered supplier. This is this situation. He is being the unregistered person, LG being the registered person. So naturally, who is going to be the person causing the movement of goods? Registered recipient, third scenario. So supplier makes the transport facilities available by himself, then he is the person causing the movement of goods. If the recipient arranges the transport, the recipient. If the supplier being the unregistered person and he arranges the facilities, but recipient being the registered person, means automatically it is treated as the movement is caused by the registered recipient. Is that okay? EV bill in case of bill to ship to model. What happens, sir? Bill to ship to model. Only one e-way bill is required. You don't need to have multiple e-way bills, so you need to have only one e-way bill in case of bill to ship to model. Now, state whether e-way bill is required in the following cases. Banu Pradap shoe manufacturer registered in Punjab sold shoes to retail seller in Gujarat at a value of Rs 48,000 excluding GST leviable. GST 18%, if you add, what's the value you will be getting? Hmm? 56,640 after adding the GST, which is more than 50,000. So e-way bill is must. Okay. E-way bill needed. Sindhi Textiles Ludhiana registered in Punjab sends cloth to job worker in Jalandhar, Punjab on a delivery challan. The value being 48,000 rupees. Okay. As the value is 48,000 rupees, of course there is no GST involving, the value is less than 50. You don't need to deliver, you don't need to create the e-way bill here. So like registration, we studied, you know, what's that? Registration form. In that part 1, part 2, A and B all we see, no? Similarly, in GST EWB also, we have two part A and part B. Part A contains the basic information. Part B contains the information regarding the transport vehicles. Okay. Part A filled by the person causing the movement of the goods. He knows about the goods. Part B filled by the person transporting the goods in their own vehicle. He knows the vehicle's details, right? So part A to be furnished by the registered person who is causing the movement of goods. Who is causing the movement of goods in these three scenarios? Supplier or recipient or registered recipient. These are the three scenarios. By goods by the transporter or e-com operator or courier. So usually who has to fill the form number 1 part A, registered person. But if he is not able to do it, he can authorize the transporter to fill this part A also. So first requirement is to be done by registered person. Yes, he can authorize the other transporter. Note, if the transporter is not registered, then get enrolled on e-way bill portal to get 15-digit unique transporter ID called TransIn. If he is not being the registered person, he needs to get enrollment number through e-way bill. In part A, what are the particulars are there? The details in tax invoice, reason for movement of goods. See, you understand? Tax invoice. Tax invoice are going to be digitalized, right? Digital tax invoice, electronic mode, e-invoice. There we studied while uploading, see, how do we issue the e-invoice? Upload the invoice in online portal with a GST portal and generate the QR code and unique number and get it downloaded, and you can send to the supplier. If the detail is uploaded, from the detail, e-way bill is autofilled. That's the advantage. From the e-invoice, the returns also be updated. Okay, that's what about the beauty. You are now reducing because of automatically transferred from where? From the tax invoice to e-way bill, tax invoice to GSTR returns, transcription error is minimized. Now you can recollect with the earlier chapter. There I mentioned, we will study that e-way bill also later. So now you will be able to understand this easily. So as you are filling the GST EWB, usually not required because most of the cases it is auto-filled. Transport to whom? The person involving higher aggregate turnover where e-invoice is mandatory. Otherwise you have to feed detail manually. And B being transport details. Person who is transporting the goods, where he records what? Goods transit number. In case of railway receipt number or airway bill number, bill of lading number and vehicle number in case of transport by road. So you now know part A is all about the goods, part B is all about vehicles. So part A will be filled by the person causing the movement of the goods, or he can authorize the transporter to fill. Part B is filled by transporter because he knows about the vehicle. Now, this details of conveyances may not be furnished in part B. You no need to fill the part B related to the transport vehicles when intrastate movement of goods happening within 50 kilometers distance, or from the place of consignor to a place of business of transporter or further transportation, or from the place of business of transporter finally to the place of business of consignee. In that case, not required. For example, Singar Academy is in Trichy, especially Trichy Orayur, and there is a lorry depot in Trichy Junction. I transport books for sale to lorry depot. Lorry depot then arranges the Trichy Junction. Lorry depot arranges this to Chennai CMT BT, okay, Coimbatore, okay. Take the lorry depot of their own CMBT, transferred here to here, that books, and it is getting delivered to Singar Academy, Chennai Nungambakam address. Is that okay? Now, for this you have to create e-way bill. For this not required, for this e-way bill not required. Is that clear? So, from the place of business of consignor to the place of business of transporter for further transportation, in this case e-way bill not required. From the place of transporter finally to place of business of the consignee, here e-way bill not required. In these two cases, e-way bill not required. Who can generate e-way bill? Okay, consignor or consignee, own or hired conveyances are by railway or by air or by vessel. If he is transporting through this, either consignor or consignee can generate the e-way bill. Usually the registered person will generate, who knows the details much better. Or in case of goods handed over to the lorry driver and he takes the responsibility, then transporter will fill this. Goods handed over to transporter for transportation by road. In that case, the transporter will be responsible. In case of railway, if you are sending the goods in parcel, especially railways, no, you don't, the railways will not take responsibility. Then no, it's your responsibility to fill the e-way bill. No, transporter is responsible if neither consignor nor consignee generates the e-way bill. If consignor or consignee is not generating, who is responsible for generating e-way bill? Transporter only. That's why I have already told you, if the registered person is not generating, then it is authorized to the transporter to generate. So it's a the final responsibility is only in the heads of transporter. Okay. In case of consignment value is more than 50,000 rupees. Goods transported by railway shall be delivered only on production of e-way bill. So if you are supposed to deliver routed through railway, you need to generate and produce the e-way bill. Only you will get it delivered from the railway department. E-way bill can be generated even if the consignment value is less than 50,000 rupees. Even if it is less than 50, you can, of course, it's optional, you can generate. No problem. Now, unique e-way bill number is available to the supplier, recipient and transporter in the common portal. Once you upload, immediately a unique e-way bill number is generated. The number is available in the hands of supplier, recipient as well as transporter. Upon generation of the e-way bill on common portal. So you don't need to print multiple copies. You can have the soft copy showing that you can deposit as well as you can take a delivery. And the same is now communicated to the department also for inspection purpose. They will come and check in the check post, right? Transfer of goods to another conveyances. What happens in case? Okay. Now, let me explain this illustration so that you will be able to understand the transfer of goods to another conveyances. Mr. Bala, a consignor, is required to move goods from Trichy to Chennai, appoints ABT transporter for the movements of goods. ABT transporters moves the goods from Trichy to Viluppuram. This is done by ABT parcel services. And for completing the movement of goods from Viluppuram to Chennai, ABT transporters now hands over this to KPN transporter. Okay, from Viluppuram to Chennai, this is now transported routed through KPN. Explain the procedure regarding the e-way bill to be followed by the consignor and transporter as the provisions of GST, law and rules made thereunder. Part A is filled, which is related to the product. Part B is about the vehicle's details. And once vehicle reaches to the Viluppuram, ABT hands over to the KPN. Now, KPN is responsible to update their own lorry number in that same e-way bill. Is that okay? Part A can be filled by Mr. Bala predominantly or recipient of the goods, or he can authorize the transporter also. That's the first situation. Okay, part A is filled by B or the recipient C, or he can authorize ABT to fill. And on reaching Viluppuram, the person who filled part A update on conveyances in part B of the e-way bill before the transfer. Now, the transporter updates in part B. Then assign the said e-way bill to KPN transporter, who will thereafter update his detail. So, the detail is filled by the transporter first ABT. Thereafter, he hands over his bill and KPN will update his own number also subsequently once it is reached Viluppuram. After updating KPN, assigning to another transporter shall not be allowed. Once it is updated by the KPN, you cannot divert to somebody else. Sir, you can deliver, sir. Rather than KPN asking some XYZ transporter to take. No, it's not possible because it's updated by KPN. Now it's KPN's responsibility to send this. Is that clear? Hope you will be now able to understand. Transfer of goods to another conveyances. Update the new vehicle number in part B of e-way bill by the transporter or generator of the e-way bill. The person who generates the e-way bill responsible for updating the second vehicle for transferring from one to another. Now, You can skip this. Consolidation also possible. Consolidated, okay. Consolidation is possible. Information submitted for e-way bill can be used for filing GST or returns also. You are electronically filing or updating in e-way bill, no, that will be directly updated to the GSTR also, returns also. Sir, I prepared the e-way bill, sir, but due to some reason I cannot move the goods. Maybe lorry breakdown or due to strike or some other natural calamity or some reasons. Within 24 hours from the time of generation, goods not transported, then you can cancel the e-way bill. You can simply cancel. Now, the e-way bill you generated, now what's the validity of that e-way bill? I generated the e-way bill. Can I move the goods after 1 month? No, it's not possible. Once you generate it, before you start moving, you have to generate. Within 24 hours, it should start move. How many days that e-way bill is valid? Okay, in case up to 200 kilometer distance, 1 day will be given. For every additional 200 kilometers apart thereafter, another day will be given, one additional date will be given. Provided the goods are transported other than over-dimensional cargo or multi-modal shipment, in which at least one leg involves transport by ship, okay, multi-modal, other than over-dimensional cargo. Lorry with 4-wheel, if you go in Chennai bypass, once I crossed a tanker lorry like a trailer, like it had around 60 tires in both the sides. So those are called over-dimensional cargo. And for that it moves very slow. And I could still remember a day, a over-dimensional cargo lorry was on road. When I go to the college, I saw that. After returning also, I saw the same. I inspected, how many kilometers will you drive a day? Sir, 4 kilometers, sir. Is it per hour? No, sir, per day. Per day they drive only 4 kilometers. That's their speed. Okay, those things are called over-dimensional. So it is not possible to fix for 200 kilometers a day. So in general, 200 kilometers will be given per day. If the distance is more than 200, for every 200 kilometers and part thereof, one additional day will be given. But in case of what is called multi-modal shipment, means you'll transport the goods in 2 or 3 different vehicles. At least one should be in ship. So lorry, some part, thereafter some part transported through ship. In that case, it's not applicable. In case of multi-modal shipment or over-dimensional cargo, for every 20 kilometer, 1 day will be given. Usually 200. In case of multi-dimensional, multi-modal shipment, over-dimensional cargo, 20 kilometers per day. Is that okay? That's what about the validity period. Now, the validity period shall be counted from the time of generation of e-way bill. Validity period shall be counted from the time of generation of e-way bill. Means the part B, not part A. In part B only you are updating your vehicle details. The moment you update it, from there 24 hours will be started counting. Day is expiring at midnight of the immediately following day of the generation of the bill. If you generate the bill, e-way bill, okay, on 15th Jan 2026 at 9 a.m. Now, when it is expired, okay, midnight. Is it 12 a.m. or p.m. in midnight? Okay, 12 a.m. That's what about the midnight. Safer midnight, huh? Right. When? Following date. 16th Jan 2026. So, your validity being, you leave this date and the next date, 17th, no. 17th Jan will be the deadline. Otherwise, 16/1/2026 midnight. Exactly 12/1 becomes 17th date. Okay. Leave the date and the next date midnight you will have the validity. Expiring midnight of the immediately following the day of registration. 26th, 15th is the registration date means 16th midnight you will get expired. Now, sir, because of some reason, sir, puncture happened, some breakdown happened, can I extend? Yes, of course, extension of validity period is also available. By commissioner for certain category of goods, some category of goods may be over dimensional, which is not possible to transport 20 kilometers a day also, then you can get the approval from the commissioner. The transporter in exceptional circumstances like a natural calamity, etc., breakdown and all, state the reason, extended within 8 hours from the time of its expiry. So you know that it gets expired especially midnight on this, at least 8 hours earlier. 8 hours earlier means 12 and 4 16th January 2026 before 4 p.m. He has to update, so I cannot supply within the specific date, give me the extension. That's how you can apply, at least 8 hours before the time of expiry. And once you asked for the extension, it will be updated automatically. And what happens, the e-way bill, once you uploaded, sir, uploaded e-way bill may be accepted or sometimes cancelled. It may be accepted or rejected by, as the case may be, within 72 hours from the time of generation of e-way bill or the time of delivery of the goods, whichever is earlier within that period, it will be either accepted or rejected. If it is not rejected within this date, what happens? It is presumed to be accepted. So you will be given only 72 hours. 72 hours means 4 days, right? Okay, 4 or 3? 3 days, okay. Within 3 days you will get accepted or rejected. If it is not accepted or rejected, after the third date it is assumed to be accepted only, default, deemed to be accepted. Yes, it will be deemed to be accepted. E-way bill generated one state is valid in another state also. You no need to generate the e-way state for every state separately. Now, situations where e-way bill is not required to be generated. When you don't generate the e-way bill. Transporting goods being LPG gas to household and non-domestic exempted categories customers not required. Kerosene oil sold under public distribution system, rations. Postal baggage transported by Department of Post. Pearls, precious stones, precious metals and metals clad. Jewelry, goldsmiths, silversmiths wears their own materials. And currency used to personal household effect. You can transfer your house property also from one location to another location using the lorry, of course not required. Coral also not required. In these cases, e-way bill not required. And goods are transported by a non-motorized conveyances, okay. Human driven rickshaws. If you are transporting using that, okay, of course, e-way bill not required to generate. Goods are transported from customs port, airport, air cargo complex, IST, CFS for clearances from customs. Okay, you are transporting from port to the place where it is supposed to be cleared. No, in that time, e-way bill not required to be generated. Movement of goods within notified areas not required to be generated. And transportation of exempted goods, okay, not required provided if it is being de-oiled cake. Okay, de-oiled cake, of course, need to generate e-way bill. Otherwise, for the exempted goods supply, you don't need to generate the e-way bill. What is called de-oiled cake? I heard about. Punak, Tamil Sona. Okay. So, de-oiled cake. Okay. All the seeds where oil is removed, extracted, then the balance will be called as cake. Very tasty one. Okay. Transportation of alcohol, liquor for human consumption, petroleum crude, high-speed diesel, petrol, natural gas and aviation turbine fuel, all these things. In these cases also, e-way bill not required. and the goods are transported being no supply under schedule number 3. As per schedule number 3, negative list not considered as supply, then it's exempted like only no, so no need to generate the e-way bill. Transported goods are transported are being under customs bond and customs supervisions, not required. See, these things, if you are linking with the customs, you will be able to understand much better. Otherwise, understand the term as it is. As customs not applicable for the CA, you no need to worry about that. Clear. And goods are transported are being transit cargo from R to Nepal or Bhutan. Of course, e-way bill not required. Any movement of goods caused by defense formation not required. Where the concern of goods being central government, state government, or local authority not required. Empty cargo containers are being transported. Empty, okay, not required. Where the goods are being transported up to 20 km already we have studied. For weighment with the delivery challan, for weighment to check what is the weight of this, and you have the delivery challan for that e-way bill not required. Right. Now, documents and devices to be carried by a person in charge of conveyances. What are the documents he has to take with him? Invoice or bill of supply or delivery challan. He has to take one of the 3. If the goods are supplied by the registered person, registered supplier, tax invoice will be there. So, there should be a tax invoice in the hands of the person in charge also. Probably, you already studied that in tax invoice. In case of supplier of goods, he prepares the 3 invoices, original for the buyer, duplicate for the transporter, and triplicate for the own copy. The duplicate copy should be in the hands of the person in charge. And if he is supplying not in the form of taxable supply, exempted supply, then he is not able to issue the tax invoice, he has to issue the bill of supply. If you are being the unregistered person, bill of supply can be issued. But if it is not being the supply, for example, I am putting my, or displaying my art in an exhibition, it's not supply, no, so I have to give the delivery challan. These 3 already we studied there, right? And copy of the e-way bill in physical form or in electronic form mapped to RFID embedded on the conveyances. Radio frequency identification device, right? Now, so you are ready, your side is ready. Now department side comes for verification. Verification of documents and conveyances. Commissioner or an officer empowered by him can intercept any conveyances to verify the e-way bill for intrastate movement of goods. In the local check post, no, normal inspectors or constables having no rights to stop and inspect. Who can inspect? Only commissioner or commissioner rank person can authorize, only then they can stop and inspect. So, because of that reason, what happens? The turnover time may be reduced. Okay, the vehicles are not going to be intercepted. Physical verification, then next one is physical verification. You ask them to open the container, go and check. Of a specific conveyances can be carried out on receipt of information on tax evasion. Tax evasion. Voluntarily, you cannot ask the driver to stop for the inspection, and asking them to open this also be now not available. Obtaining necessary approval from commissioner or an officer authorized by him. So what happens? The lots of malpractices will be now curtailed. Now, what happens if the inspection happens? Inspection and verification of goods is done. And goods are moving from A place to B. Okay, where at X point it is inspected physically. Can I again check in Y place? No, no sir. Once the inspection is completed, you cannot again stop the same vehicle once again. Okay, if you want to stop, still you need to get more evidence that there is a malpractice happening. And that too, this person investigates what's available here, should also upload in the common portal for his own inquiry. So, inquiry is now available. Persons here X, here Y, no. While seeing that lorry with that number, he goes and verifies with the information available in common portal, finds that it is already inspected by X in this location, so he has no rights to inspect once again. In that too, for the inspection, it takes at least 12 hours to complete the verification. So until the 12 hours, your lorry is kept there itself idly. Already you have seen that e-way bill has the time restrictions that becomes invalid. If 12 hours is detained only because of the reason, then there may be chances of expiry of the validity also. No. In that case, he needs to upload this delay also, automatically the validity also be extended. So, inspection and verification of goods. A summary report of inspection shall be recorded online within 24 hours of inspection, and the final report shall be recorded within 30 days by of such inspection by P. After physical inspection, the same conveyances cannot be intercepted for physical verification. So, again it cannot be intercepted. Okay. Unless the receipt of information on tax evasion. Again he gets an information regarding tax evasion, then he can go. Otherwise he cannot intercept. If the intercepted vehicle detained for more than 30 minutes, the transporter may upload the said information in the common portal for availing the extension also. Next. Okay. Restrictions on furnishing of information in Part A of Form GST. While you furnish the details in Part A regarding the output supply, what are the goods you are supposed to move, no, you have to give the details in Part A, no, but if you are not filing the returns properly, you are not allowed to upload these documents. So, Mr. A being the supplier, he has to file the GSTR also, returns also, no. If he fails to pay the GSTR return or fails to pay the tax and all, if he is not following the systems properly, his name is blocked, he is not eligible for filling the Part A in GST EW1 form. No person will not be allowed to furnish the information in Part A in form number EWB, okay, e-way bill, okay. Okay, e-way bill, where a composition supplier has not furnished the statement for payment of self-assessed tax for 2 consecutive quarters, 6 months. If he has not filed the statement for payment, the payment of tax, whatever it may be, for 6 months, he is not eligible for filling the Part A. If he is being the regular taxpayer for 2 consecutive months, usually composition taxpayer pays the tax once in every 3 months. Regular taxpayer will pay the output tax once in every month, right? Once in every month. Is that clear? Composition taxpayer failed to give the documents or payment details for the 2 consecutive quarters, 6 months. No, he is not eligible for filling the Part A. In case of regular taxpayer, for 2 consecutive months, he has not furnished the details regarding the returns. Whatever the things you are supposed to give as a return, fail to pay, submit, then you are not eligible for GST e-way bill filling. And a person paying tax under regular scheme has not furnished a GSTR1 for 2 months or quarters, as the case may be. This one is all about paying tax. Okay. Now, this is all about GSTR1. GSTR1 is different, this is other form. Okay. A person whose registration has been suspended temporarily. In that case also, you are not allowed to fill the Part A of the GST e-way bill. Okay. However, Commissioner may, on sufficient cause being shown and for reasons to be recorded in writing, allow furnishing of the said information. But Commissioner may, on request from him, can allow to fill this. Generally not allowed. Okay, you need to get the permission from Commissioner. Now, tax deduction at source and collection at source. We'll be dealing these 2 sections here. Very small section. Section 151 is all about tax deduction at source. Section 52 is all about collection of tax at source. Now, tax deducted at source. A department or establishment of central government, otherwise simply government departments, local authorities, government agencies, notified persons. Okay, notified persons. In these four cases, they have to deduct the TDS under section 51. Okay, supplier, recipient being government departments, local authorities, government agencies and notified persons. Value being 1 lakh. Value being 1 lakh. I make it 10 lakhs. Okay, 10 lakhs. Okay. Government departments, local authority, government agencies and notified persons. As the supply value exceeds 2.5 lakhs, while making the payment, they have to deduct at the rate of 1% from payment. 1% on this being how much? 10,000? 10,000 will be deducted and this amount is deposited for the supplier purpose only. Clear? Very simple. This is called TDS. In case of e-commerce operator, it comes under TCS. So, recipient being government departments, local authority, government agency, while making the payment for the supply from the 10 lakhs, 10,000 is subtracted, only 9 lakhs 90,000 rupees is payable. Deducted. In case of e-com operator, okay, supplier, e-com operator, Amazon, Flipkart and recipient. Goods are routed through supplier to the recipient and for that the payment is also routed directly to the supplier from recipient like Ola, Ola or Uber. Okay, Ola and Uber. Ola connects these two parties through his own online facilities. Payment is also made routed through either Ola or directly to supplier. Cash payment also you will do or you just pay the amount to the auto Ola, doesn't matter. For everything, Ola demands a commission. Okay, commission. Probably the value of this services, okay, supply of services. The value of supply of services probably 100 rupees. Probably 100 rupees. This is the supply of service value. Demands a commission of rupees 10 rupees by Ola. While getting 10 rupees, he demands tax also, a GST means the tax also. He collects additionally for that tax, which is 0.5%. 100 into 0.5%, 0.5. He has to collect 10.5 and then this 0.5 is deposited by Ola for supply only. While collecting, additionally collected, then it is called tax collected source. While paying tax is deducted, then it is called TDS. Clear? Very simple. Topic is over. Few more extra conditions that the chapter will be completely over. Now, a department or establishment or central government, state government, local authority, government agencies, who are the other notified persons. An authority or a board or any other body set up by an act of parliament or state legislature like port trust authorities and all. They are called board, okay. CBDT board, okay, all this board set up an act of parliament or established by any act, any government will be called as notified person, where 51% or more is participation by equity or control by the government's control. Society established by the central government or state government or local authority. society, okay, under this registration act, PSUs. In these cases, you have to register under section 51 and you have to deduct the tax. Deducted deducts TDS at the rate of only 1%, that too if the value of supply exceeds 2.5 lakhs. Value of supply excludes GST and cess. Okay, if 10 lakhs, GST applicable on this being 1,80,000 rupees, and this 1% is collected only on this 10 lakhs. No TDS supplied by PSU to the another PSU. If the supplier is also PSU and recipient also PSU, of course TDS is not applicable, and supply between these two parties also be not applicable. Okay, supplier being other than these notified persons, then of course what happens, you have to deduct the TDS. Now, location of the supplier and place of supply is different from the place of recipient. Okay, then what happens here? Supplier located in state A, place of supply being state A, but registration done by a person who that is also in state A, all are in state A, then TDS under section 51 is applicable, means intrastate. In case of intrastate, CGST, okay, intrastate TDS is applicable. But state of supplier being A, place of supply being A, registration of recipient being state B, so it means it moves from here to here. Okay, okay, clear? Now, how do you decide whether it is interstate or intrastate? Location of supplier and place of supplier are both same, then intrastate. If these two are not same, then it is called interstate. It is called interstate. For interstate sale, TDS is applicable. For intrastate sale, TDS is also applicable. But where the place of supply and registration of recipient place is different, then TDS under section 51 is not applicable. Okay, to make you understand, supplier being in Tamil Nadu, recipient being in Bangalore. Okay, now what is the place of supply? Supply happens from Tamil Nadu to Bangalore, and automatically the tax goes to government, Tamil Nadu government only. Tamil Nadu government says this person runs the business here, I give lots of facilities, so tax is only for me. Okay, the place of supply being Tamil Nadu and recipient the other place, so interstate. This is called interstate. Okay, then what about the section 51 sir? Applicable. Supplier being in Tamil Nadu, recipient also in Tamil Nadu. Okay, then it is called intrastate. Then section 51 will be applicable. Supplier being in Tamil Nadu, okay, and location of supplier, he goes to Bangalore, travels to Bangalore, and supplies to recipient in Bangalore. So now the supply takes place at Bangalore. Okay, then automatically what happens? This is interstate. Okay, one second. intrastate. This is intrastate because these two are the same place, right? So it is intrastate. Then the supply and the recipient are on the same place, but the supply registered place is totally different. Then section 51 is not applicable. Section 51 is not applicable. Clear? This point you have to be careful. Location of supplier being state A, visits to recipient states and there he rendered supply. So it seems to be intra-state only because the supply also takes place only in Bangalore and recipient is also being enjoying the facilities only in Bangalore. Okay. I am having the training institution. Okay. So I am providing the services from Tamil Nadu. Suddenly some institution asking me to come and deliver some lecture in Bangalore. Now I moved from here to Bangalore. I am rendering service in Bangalore. Now what happens here? Totally different. It's intrastate because supply provided in Bangalore to the recipient in Bangalore, then it is intrastate by my registered location is Tamil Nadu. Then automatically TDS is not applicable. Okay. So TDS is applicable. In this case, TDS is not applicable. Okay. Now, this TDS should be deposited within 10 days after the end of the month in which TDS is deducted. If the TDS is deducted, you have to deposit within 10 days. Furnish the TDS certificate. Only then he can claim this for payment of tax. Content being contract value, rate of deductions, amount, everything will be there. Should be filled in GST or 7A form. Okay, all these details. Penalty for failure in furnishing TDS certificate. The deductor should furnish the TDS certificate within 5 days of crediting TDS to the government. Okay, within 5 days. He has to deposit. January month TDS will be deposited on 10th of February. Within 15th of February, he has to give the details. If he fails so for every day delaying, 17th means for the 2 days delay per day 100 rupees will be payable or 5,000 between these two, whichever is lower will be the penalty. Deductee shall claim the credit in electronic cash ledger. This will be available in electronic cash ledger. Okay, it is not electronic credit ledger, it goes to electronic cash ledger, his own tax. Okay. Now, interest under section 50 is payable for failure to pay the TDS. If the TDS is not paid, then interest is payable. Default amount is calculated as per section 73 and 74. Refund in case of excess and unauthorized payment also be possible as per section 54. That's all. So with that, the TDS concept is over. 51. 52 is all about TCS concept, already explained. It's very simple. Let's finish up. E-com operator not being an agent shall collect half percentage on the net value of the supplies minus return. Supplies being 200 rupees, return being 50, then for 150, whatever the commission he collects, on that he has to collect TCS also on this. His own commission plus 1 rupee 50 paise. Commission 100 rupees, 10 rupees. For this net value, he has to calculate half a percentage, and that should also be includable. And recovery from the operator, TCS certificate deposit within 10 days, the same condition, and furnish the statement of outward supplies returns electronically within the 10 days after the end of the month, and furnish an annual statement regarding this. Any omission or incorrect particulars in statement shall be rectified in statement furnishing subsequently, and supplier shall claim this in EC, electronic cash ledger. So the TDS and TCS both will be enjoyable by the real person who is paying no in the electronic cash ledger. It's not electronic credit ledger. So with that, now filing of returns. If you are being the registered person, what are the returns should be filed? You purchase and you sell. Purchase 1000 by paying GST 180. Sales 2000 rupees by collecting the GST 360. After adjusting this 180, balance will be payable. This is output tax. This will be ITC. This will be the tax payable under electronic cash ledger. Hope this happens on Jan 2026. Now I am going to talk about RP, registered person. Registered person should give this detail by February 10th itself. Okay. Under section 37, RP should update the details regarding this 2000 and GST paid on that 360 by registered person. Okay. Before, on or before, okay, on or before 10th of February. 10th of February. In GSTR 1. GSTR 1. First work. Related to this. Second work. What about this one, sir? He is going to verify. Okay. This one is updated by his own supplier, right? He could have uploaded by 10th February by his supplier. His supplier. Now, after 10th February, from 11th onwards, 11th February onwards, okay, up to 15th February. If he goes and log in his own portal, okay, this detail is available there in electronic credit ledger. 1000 GST paid on this being 180. In GSTR 2A. In GSTR 2A. Clear. Now his duty is, in this period, he has to go and check and say yes, correct. Once he clicks confirmation button, this will be automatically updated in GSTR. So GSTR 1 is all about updating the output supply. GSTR 2 is nothing but input supply. Input supply you are not going to feed actually. All these things are supplied by, means upgraded by supplier. For your case, the supplier uploaded information is available in your portal automatically. You have to go and verify with your invoice and supplier's invoice, and you have to say that confirm. Because of that confirmation requirement, it is available in 2A form. Once you say confirm, then that will be automatically updated in GSTR 2 form. So from this it is very clear what? A is only pending form, confirmed form being 2. And if you say that, sir, 1 is missing, some item is missing. You might have purchased from some other party also. 500 by paying 90. This one is missing. Can I upload? Yeah, of course you can upload. If you upload, this becomes a part of information GSTR 1A form of that supplier. So you now understand 1 and 1A. Whenever I have the A, it's a temporary form. 1 means it's a confirm form. So this one is okay, sir. But there is one more item, 500 plus 90, this is missing. You can now feed this detail. If you feed this detail, GSTR 1A form of this supplier, okay, supplier 1 and supplier 2. In supplier 2's login credential, if you go and see, he will get this detail. This registered person has purchased 500 rupees worth of goods by paying 90. Now, on 16 and 17, okay, he can again see. He can either he can, yes sir, I missed to record, or no sir, it is not my own real supply. Once he says it is yes, this will be automatically updated in GSTR 1 form. So from this is very nice. Now I am sending a mail to you. After reading your mail, you confirm the mail. Until that period, the mail remains in bold title. Once you read, then it becomes unbold. The same happens. It becomes in 2A part. Once I confirm, that it becomes 2. If I have any dispute, I will return and it comes to your own book, to your own mail ID back. That will be again 1A form. Once you read and it becomes unbold, like similarly, once you read and it becomes unaccept, it becomes GSTR 1. That's how the transactions are happening. So what's your duty? Every month, previous month's details should be updated. Supply will be updated from 1st of the next month to 10th of the next month. 11th of the next month to 15th of the next month, you just go on verify. All the purchases promptly auto-populated. You have to accept. If there is any variation, you can feed and it may be automatically reflected to the real supplier's book. He can again recheck on 16 and 17 to confirm this. Until that period, it is available in his book in GSTR 1A form. Once it is confirmed, then it is coming under GSTR 1 Paka. Okay. Third. Now, third step is what? I might have supplied to some third party, probably X. This fellow, I missed to record here. No, this fellow might have updated. This will be available in where? My GSTR 1A. This fellow. I supplied to A and X. I updated only this one. This is not updated. This X now updated and confirmed me. Sir, you have missed, sir. On 16 and 17, on 16th and 17, on 16 and 17, I can check and see whether there is any updations from my supplier. If I confirm, then GSTR 1 is ready. Paka. On which date? 17th. And fourth step, 20th of the month. 20th Feb. I have to reconcile GSTR 1, 2 and all based on the details, pay the tax and file the complete details under GSTR 3B. So, 3 forms are there. GSTR 1, GSTR 2, GSTR 3B. GSTR 1 is all about updating the outward supply. GSTR 2 is all about inward supply. Usually it is auto-populated. GSTR 3B is the reconciled one, filing the returns to the government after the payment of tax. 1 to 10 and 11 to 15 and 16 and 17 and 20. The date 20 is relaxed, some cases maybe 21 also. We'll see that all in detail hereafter. Is that clear? 3 predominant sections are going to be covered simultaneously. One is all about furnishing the details of outward supply. This is section 37. Section 38, furnishing details of inward supplies. This one. For CA, you don't have the sections to study. To have the sequence story like I have included, but it is not required for your examination purpose. And section 39 is all about furnishing the returns under GSTR 3B. Is that clear? Clear? What about the GSTR 4, GSTR 5, maybe composition levy and UIN supplier? For those, the other form may be applicable. But anyhow, you have to finalize complete payment by as per section 39. As per section 39. And what is called first return? What is called first return? What is called first return? Immediately after your first registration, the return you submit, no, it's called first return. Very simple. Until that time, you don't have any registration. It's the first time you got the registration certificate, you have to submit. There are some extra provisions coming under section 40. Now, then you have to directly jump to section 44. What is that? Annually, once you have to submit complete details, annual return as per GSTR. In GSTR number 9, the due date for filing this annual return be 31st December. Very often I noted this here or there. Okay. What about the final return? Final return. Once you cancel that, finally you have to submit. Where extra column will be there for what? Raw material stock in work in progress and finished goods. So you are submitting full details. Okay, to refund that amount. Is that clear? So only these 6 sections are mandatory. That too, of course, 38 is also not required. 38 is also not required. Okay, this is not required. So 37, 39, 40, 44, 45. These are the sections you have to study. Now what happens, sir, if I don't file the return? You will be getting a notice as you are being the defaulter of filing the return. And if you late file, then you have to pay the late fee also. You might have studied the income tax practitioner in income tax. Similarly, we have the GST practitioner also, will be called as goods and service tax practitioner. This is similar to the income tax practitioner we studied in direct taxation. The same will be applicable here. You can apply for the GST pay and write the examination and pass, and you will get your own login credential and all. Using the login credential for your clients, you can do the registration process and all will fall under goods and services tax practitioners. Hope you will be now able to understand all these cases. Now GSTR 4, GSTR 5 will study. So now GSTR 1, 2, 3B. Okay, 3B, 3A, 3B. 3A, since the inception of the GST Act itself not followed, so it's now waste. Okay, we have directly go for GSTR 3B. GSTR 4 and GSTR 5 is for the composition taxpayers and others. Right, let's start with how do you file the return? Mode of filing the return: GST and portal. Using the offline utilities also you can pay or file, and GST Suvidha provider through which also you can file the returns. We'll start with the first one. Section 37 is all about what? Furnishing the details of outward supplies. Already told you, month on month you have to file the return. GSTR 1 default. Month on month you have to file the return. It seems to be very hectic. Then a relaxation is given. The relaxation comes under QMRP. Okay, QRMP. Okay, QRMP. Quarterly return, monthly payment. So already told you in general case, month on month 20th you have to pay tax and file the GSTR 3B. Sir, I am a small taxpayer, sir. So much of complication. Every month, every 20th I have to file the return means very tough, sir. Okay, no problem. So you can pay the tax every month, but file the return only every 3 months. Okay, quarterly return, but tax is payable monthly. But if you are filing the returns quarterly, your recipient cannot enjoy the ITC, am I right? Yes or no? Unless supplier files the document, returns, the recipient cannot enjoy the ITC. Yes or no? See what happens here? Supplier, recipient, supplies 1000 rupees goods, 180 GST. Supplier has to deposit and intimate. Okay, what? Deposit and document uploaded means returns filing. Only then R can enjoy the ITC. But as per the QRMP scheme, okay, sorry, this one is payment and documents uploaded. Payment and document uploaded. Okay. As per the QRMP scheme, you have paid but the document uploaded only once in 3 months. Now the problem is claiming the ITC in the hands of the recipient. Because of giving some facility to the supplier, it should not be a problem for the recipient, In that case, okay, document cannot be uploaded, right? Means GSTR 1 you are not uploading. You are not uploading GSTR 1. So, he is not able to enjoy. So, as you fail to upload this one, I give you a simplified form. That's called IFF. invoice furnishing facility. What is that? You may supply to n number of customers. Though you supply to n number of customers, only few of them are in need of ITC. I may supply to the recipient who is being the registered person, to the unregistered person also. Unregistered person is not eligible for ITC. Only the registered person is eligible for ITC, no. So 100 forms, out of the 100 forms, okay, ITC eligible customer being only 15, balance 85 are not eligible for ITC. In case of GSTR 1, you have to enter all the 100 forms. But in case of IFF, you might have guessed what are the forms required to be uploaded? Only the 15 forms. So only these 15 invoices details are furnished through IFF, so that recipient also enjoying. Those recipients are not eligible for ITC, their tax invoice is not uploaded. But quarterly once, IFF will not be there, complete QRMP means GSTR 1 will be there. So January, February, March. February you pay and fill IFF, and March pay and fill IFF, and in April pay and fill the GSTR 1. Okay, once in every quarter. Quarter represents January, February, March, April, May, June. These are the quarters. Okay. So January, February, March, first quarter, second quarter, IFF, and third quarter, no option. He has to go for GST, giving all the details. QRMP scheme. That is called QRMP scheme. Is that clear? Hope you will be now able to understand GSTR 1 and IFF and QRMP scheme also. If you are being the regular scheme, you have to go for paying the tax and filing the GSTR form within the due date. Okay, monthly once. If you are being the QRMP scheme, and payment will be done monthly once, but IFF will be used for the first and second month. The third month you have to give GSTR. Okay, clear? Hope you will be now able to understand. Now let's start with the section 37, furnishing the details of outward supplies. Persons required to furnish the details of outward supplies being every registered person including CTP also. But IST not required, NRTP not required, composition taxpayer not required, and TDS deducting person not required, TCS person not required. TDS not required, TCS not required, and OIDR not required. Except these person, all the registered persons should file the GSTR 1 including CTP and furnish in form number GSTR for the month in general. In case of QRMP scheme, quarterly once. Okay. This is for QRMP scheme. Clear? Electronically in the common portal, either directly or from facilitation center. Either you can fill yourself or there may be some facilitation center. You can go to them, okay, and ask them to do the job for you, okay. And a nil GSTR 1 can be filed through SMS using registered mobile number. If you don't have any outward supply, inward supply, zero entry, okay, no inward, no outward, you have not operated the entire 1 month. Do I want to file the return? Once you are falling under this case, you have to file every month, no other way. But if you don't have even single transaction in any of the tables means if you open the forms, there may be input details and output details. You don't have any record in all these forms, then it is called zero. In that case, you can file nil GST return. In that case, you just send an SMS, that's more than enough. Treat it as filed return and promptly. Is that okay? GST 1. And due date of submission of GSTR 1 being what? Can file between 1st to 10th of the next month, okay, or quarter, succeeding month or quarter. Quarter is for the QRMP scheme, generally it's a succeeding month. Cannot file between 11th and 15th. Why the form cannot be filed between 11th and 15th? By the time it is going to be analyzed by the recipient, right? And succeeding month or quarter. And 16 and 17, you may still have the chance to correct it, because by the time 16 and 17, recipient will verify and update, and based on that you can go and confirm. Cannot file GSTR 1 before end of the current tax period. Okay, you cannot file the return before this. For example, January month. Can I file the return? Usually January month return will be filed only from 1st to 10th of February. Now, can I file on 15th of January itself, sir? I had no possible, because you still have the period where in that period also there may be supply. So if you are paying this time itself means it's underpayment maybe. Okay, so it's not allowed. Provided if you are being the casual taxable person, by this time your entire business is closed, then you are allowed to file the return. Okay, except if you are being the casual taxable person after the closure of their business and after getting the cancellation of GST of a normal tax payer, you can file the return within the due date, within the same month itself, within the same month. Now, the time limit is extended by the commissioner as follows. Already told, general time already referred, and sometimes the 1 day may be extended in all the cases, right? In case of QRMP scheme, rather than 10th, it may be 13th. Other cases, it's rather than 10th, it is 11th date. Okay. Usually 10th. 1 to 10 is allowed. 1 day extra is there for the extension given by the commissioner. Okay. Commissioner, okay, he can extend. And in case of QRMP case, 3 days may be extended. And invoice furnishing facility. What is called invoice furnishing facilities? Already told you, no. Okay, where if you are opting for quarterly return monthly payment scheme, IFF is an optional facility provided to QRMP scheme to file their details of outward supply in first 2 months of the quarter. First 2 months of the quarter, up to a cumulative value of 50 lakhs in each of the first 2 months of the quarter. Okay, first 2 months of the quarter. Cumulative value. Overall, the transaction value should be less than or equal to 50 lakhs. Sorry, if it is not so, you are not eligible for the QRMP scheme. You have to go for the regular payment. Okay. However, invoice for the last month of the quarter are to be uploaded in GSTR only. Already told you, for January, February, March. January you can use the IFF, February you can use the IFF, but March you need to use the QRMP only, means GSTR 1 only. To pass the credit to the recipient. Why? For the first 2 months, the IFF is furnished to help the recipient to enjoy the ITC. Okay. Reflected in recipient's inward supplies form. It may be reflected in the inward supplies form. So that will be 2A. If you upload the outward supply in GSTR 1, it may be available in GSTR 2A form of the recipient. Once he confirms, it goes to A. But if I upload using IFF, it will be reflecting in 2B form. Once he confirms again, it will go to the ITR 2. So GST 2, it will go to GSTR 2. Okay. Hope. And that already told 4. What about the GSTR 4, sir? This is for the composition levy. In the case of composition levy, it will go to 4. Otherwise, 3. 3 is the general. For the composition, it's 4. In case of IST, it goes to 6A. A means temporary. On confirmation, it will go to remove A and that form will be automated. Right. And D bar. From furnishing the details of outward supply in GSTR 1 and IFF. When you are not allowed to file the details under GSTR 1 or IFF. Okay. If the details of supplies for any of the previous tax period has not been furnished by him. January, he wants to file this on 1st to 10th February. But December requirement still not filed pending. Earlier period return not filed means this period is also not allowed. Okay, that's the first thing. D bar from furnishing details of outward supplies. When a registered person shall not be allowed to furnish the details of outward supply in form number GSTR 1 if he has not furnished the return in form number GSTR 3B of the preceding month. In this month, GSTR 3B not filled, then he is not eligible for this period. A registered person acting QRMP scheme shall not be allowed to furnish the details of outward supplies in form number GSTR 1 or using IFF if he has not furnished the return in form number GSTR 3B for the preceding tax period. For him, it's quarterly once. No. Quarterly once he has to file the GSTR 1. If he fails so, he is not eligible. Right, that's all. So rest of the things are similar. Okay. Now, what are the content will be there in GSTR 1 form? So you just open a form and see. Okay, already told you the forms, various forms. Similarly, if you go and see the GSTR 1 form, these are the contents will be there in paragraph like a table form, like you have to feed the data. So usually you have to fill the basic details like GST and legal name and aggregate turnover the preceding financial year to decide whether you are eligible for any benefits in this year or not, HSN number and other things. And you have to fill these details, outward supply related to the B2B, including UN folders. Okay, unique identification number for the UN agencies, B2C supply. Okay, in case of B2C supply, consolidated details can be filled. Already we have seen, no, tax invoice is not required when the transaction value is less than 200 and recipient is not in need of ITC. Okay, then automatically you can prepare a consolidated tax invoice in the day end. In case of inter-state transaction, 2.5 lakhs and more, then you need to issue the independent tax invoice. So those things are there, no? That particulars what we studied there, no? All these things are going to be updated. Zero rated, debit note, credit note, nil rated, exempted, amendments of the prior periods, anything. All these details are going to be filled in GSTR 1 form. Clear? Now already explained what is called B2B, B2C and all. Okay, in case of B2C supplies, interstate supplies, B2C, customers are not required any ITC benefit or not required tax invoice because it's not eligible for ITC. Invoice wise details is required if the invoice value is 2.5 lakhs and more. State wise, consolidated details is enough if invoice value is less than 2.5 lakhs. I render interstate supply for 5 states. Okay, for every state I sell to many customers, many buyers, and all this value is less than 2.5 lakhs means I can consolidate for entire state put together as a single one and upload. Okay, if the value is more than 2.5 lakhs, I don't have the options, I have to upload independent tax invoice. Okay, if I do operations in 5 states and all the values are less than 2.5 lakhs, I can upload one tax invoice for every state separately. Okay, but intra-state supplies consolidation is more than enough in case of B2C. In case of B2C, okay, B2C means customers is not required any tax invoice because he is not eligible for ITC benefit. Okay, if the ITC benefit is required, definitely you have to upload the tax invoice independently. Only then the tax invoice uploaded stating for this person I have supplied, this person is eligible for getting ITC, credited in his GSTR 2B form, right? Now let's see here. Mr. XY makes intrastate supplies for 10,000, 50,000 to Mr. AB, a registered person, and 1 lakh to Mr. DE, unregistered person. Okay, AB. Okay, what's short of sale? Intrastate. Who is he? Registered person. Value 10,000. Recipient and inter or intra and value. What about the invoice requirement? If the recipient being the registered person, invoice is required always, need 10,000 and another 50,000 to same AB, also interstate, value being 50,000 need. And from XYZ to DE, who is DE? Unregistered person, value being 1 lakh. What about the scenario? Intrastate. Now the question is, as he is being the unregistered person, he is not eligible for ITC benefit, so tax invoice is not required. Do I want to upload this invoice? No, not required. He also makes interstate supply. Now this is interstate supply for 2,60,000 and 45,000 to RS. 2,50,000, 60,000 and 45,000. To RS, a registered person. Who is he? Then it is B2C. A registered person means B2B. Okay. B2B, we are in need of uploading the tax invoice mandatorily. No other way to escape. And 1,50,000 to OP, unregistered person. Okay. And interstate. These three are interstate, these three are intrastate. These two are registered person, this one being unregistered person. In case of interstate, 2.5 lakhs condition is there. As the condition is not fulfilled, invoice not required to be uploaded. Clear? Let's move on to the next one. Do I want to indicate the HSN number, sir? Yes. If my annual turnover in the preceding financial year is up to 5 crores or more than 5 crores, if it is up to 5 crores, whenever I do B2B supply, I need to fill at least 4 digits of HSN number. If it is being the B2C, not required, but you can show optionally. More than 6 crores, definitely you have to fill the HSN number at least 6 digits. At least 6 digits. Now, the turnovers of Yellow Lemon Private Limited, Red Pepper Private Limited, Blueberry Private Limited in the previous financial year, their turnover being 1.5 crores or 4.8 crores. Okay, 1.5 crores. This one is 4.8 crores. This one is 6.8 crores. 6 crores. Okay. How many digits HSN should be quoted above situations? In the first scenario, if it is being B2B, 4 digits. Otherwise, B2C optional. B2C optional. In this case, B2B 4 digits, B2C 4 digits optional. In the last case, B2B, B2C 6 digits must. Clear? Now, amendments to outward supplies furnished prior periods. Can I edit? Last year I furnished wrongly. Yeah, there is an amendment table also. January, for this month particulars can be filled in February 1st to 10th. But here you filed wrongly. While filing March return in April 1 to 10, you can go and amend this. In the GST form, there will be a separate table for amendment details to be furnished. Scope of amendment correction entry. Debit note or credit note. Via debit note and credit note also available, and refund voucher and also. While collecting the advance, you paid the GST. Later, you didn't supply, you refunded that. So, you want to reverse that, you can do the reversion. Okay, here, particulars furnished in GSTR1 prior periods can be amended by way of the amendment tables given in GSTR1 of the subsequent period in the case of data entry error. And rectification of errors for the prior period, but the time limit is what? The general time limit is the same. What about that? Filing of the annual return or 30th November, the same day, whatever it may be, the deadline is that same. Time limit for rectification. whichever is earlier of date of filing of annual return or 30th day of the November following the end of the financial year. An entity has furnished the annual return for the previous year being 15th August in the current financial year. An error is discovered in respect of a transaction pertaining to the month of November of the previous year. What is the time limit? This one or 30th November, between these two, whichever is earlier. So 15/8 is the cutoff date. Now other points. Nil return is also possible. Just to send an SMS, that is enough that GSTR 1 is filed like. Okay. And GSTR 1 needs to be filed even if there is no business. But through SMS, time can be filed first day of the month subsequent of the tax period. Okay, next month you can finish off. Nil return cannot be filed what? Any point to be filled, any transaction to be filled in any of the blocks, any of the tables, though it is taxable or not taxable. So saying that, so I did only exempted supply, sir. I purchased where the GST is payable and RCM, sir. Yes, of course you have to file. It's not nil return. Has made any outward supply including exempt, nil rated or non-GST. Sir, I supplied but it's not actually. No, you have to file the GSTR. It's not nil return. And received supplies where RCM is applicable, an amendment table is filled and a debit or credit note. In that case, SMS is not available. Okay, nil return cannot be filed. You have to go for the regular return only. Taxpayer applying GST cancellation is required to file GST up to the active period. Okay, until the cancellation you have to file. Taxpayer converting from normal taxpayer to the composition also has to file the return up to the normal taxpayer status. Right. Now let's move on to the section 38. Actually, section 38 is not required for the CA Inter. Already told you it is nothing but auto population in where? In this form. This form. 4A is for composition, 6A is for the IST, and on confirmation this will be automated and transferred to your regular form. And in case of GSTR 2B is what is about GSTR 2B? IFF. The filing using the IFF will be auto populated in GSTR 2B under section 38. Anyway, we'll finish up that as a sequence story will be completed. Right. Furnishing details of inward supplies, a system generated read only statement updated on a real time basis. Once the outward supply is updated, immediately the next moment it is available in your GSTR 2A or 2B or 4A or 4B, 6A as the case may be. Details of outward supply furnished in form number GSTR 1 or IFF is auto populated in by registered person, then it will be updated in GSTR 2A. GSTR 2A. Is that clear? If it is routed through IFF, then it is updated in GSTR 2B. GSTR 2B. And if it is updated by the composition levy registered person, it will be updated in 4A, and IST cases it comes under GSTR 6A. Rule number 88C, where the tax liability as per the form number GSTR A exceeds the tax liability as per the form number GSTR 3B more than a specified extent, the registered person would be intimated on the portal of such differences and directed to either pay the differential tax liability along with the interest and explain the difference within 7 days. Okay. The GST R in one being 100, but you while paying you stated this being 80 and paid only 80. The difference 20 is short paid. You have to pay within 7 days, and applicable interest should also be payable, and you have to give the proper explanation. Oh, you didn't pay properly. Is that okay? If there is any difference. Okay. Furnishes a replay explaining the reason for the amount remaining unpaid. Such a person should not be allowed to file the GSTR 1 IFF for the subsequent tax period. There we have seen IFF and GSTR 1 cannot be filed if the earlier tax period returns remains unfiled. Okay. Here what happens, if he fails, then he is not allowed to go for that loan. So it's repetitions like, okay. Form GSTR 1. Details of invoice furnished by NRTP goes to it's an additional learning. Okay, if it is filed by NRTP, it goes to GSTR 5. IST will go to GSTR 6, and TDS goes to GST at 7, TCS goes to GST at 8, and in case of CES, okay, CES developer routed through bill of entry made available in GST at 2A. Okay, in case of CES and DTA, instead of tax invoice, you have the equivalent tax documents for the import and export purpose, which is called bill of entry. That bill of entry is also similar to the GST at 1A, tax invoice, automatically it is updated in GST at 2A. Now, let's see GST at 2B. What about the GST at 2B? IFF. This is IFF case. Okay. Now, outward supplies other than QRMP in form number GSTR 1. In case of QRMP scheme, he has to use IFF for the first month of the quarter, second month of the quarter. In the third month, he has to file the GSTR 1. Clear? Okay. Now, for them, what is the cutoff date? 13th. QRMP scheme, 13th will be the cutoff date in the succeeding month. For monthly GSTR form, 11th of the succeeding month, 1 day is extended. Now, let's see. If a supplier acting QRMP and files an invoice dated 15th July on 13th August, it will get reflected on which book? GSTR 2B. In case of IFF, it will be available in GSTR 2B. If it is being routed through GSTR 1, it will go to the GSTR 2A. 38 is over. 39. 39 is nothing but monthly return. It's a reconciliation of input and output and all, and you have to pay the tax before filing. Here you need to attach the tax payment document also. So monthly return furnished in GSTR 3B containing summary of outward supplies by every registered person except, already we have studied there in GSTR 1 case, section 37. IST not required, NRTB not required, composition tax payer not required, TDS, TCS, OID or service persons not required. The same comes here. But in case of QRMP scheme, they have to file once in every quarter. The cutoff date being 20th, the date of succeeding month. But in case of QRMP scheme, the date may be 22nd or 24th as the case may be. Okay, depending upon the state, the date may be 22 or 24. Okay. Normally 20, but QRMP scheme, after the completion of QRMP the quarter, you may be given another 2 more days, means 22 days or 24 days. Now, QRMP scheme, who is eligible? Conditions for availing. It is available for the small taxpayer. Their aggregate turnover is less than or equivalent to 5 crores in the previous financial year. Should have furnished the last return on the date of exercising the option. So while going for the QRMP scheme, he has to file the returns as per the proper one until the last date of availing the QRMP. What is the QRMP benefit? Already we studied. Monthly once he has to pay, but quarterly once he has to file the return. But at least he has to file the IFF the remaining 2 months. Manner of exercising the option. Okay. January, February, March, April, May, June, July, August, September. These are the every quarter. September, October, November, December. These are the quarters. Okay. In general, January will be filed in 1st and 10th of February. Okay. In case of QRMP scheme, this is normal scheme. In case of QRMP scheme, January, February, March, all the 3 put together, when he has to file? April 22nd or 24th. Indicate his preference from first day of the second month of the preceding quarter. For this quarter, first day of the second month of the preceding quarter, 1st February onwards, till the last day of the first month of the quarter for which the option is being exercised. Last day of the first month of the quarter. Till the last day of the first month of the quarter for which the option B is being exercised. Okay. First day of the second month of the preceding quarter. Okay, once again, I'll make this way. Usually this will be filed here. April will be filed in 1st to 10th. In case of QRMP, for this quarter, you have to file only on July 22nd. Okay, this is 20, this is 22nd. This is 22nd and 24th. 22nd or 24th. So, to enjoy the QRMP scheme here, in this quarter, if you want to go for, indicate this preference from first day of the second month of the preceding quarter. First day of the second month of the preceding quarter. 1st February of the earlier quarter. Till the last day of the first month of the quarter for which the option is being exercised. First month of the quarter. 30th of February. Sorry, April. Okay. Within this period, he has to intimate, sir, I want to go for the QRMP scheme. If you want to enjoy the QRMP scheme in any quarter, you have to intimate that earlier to that. Earlier means which period? Previous quarter, first day of the second month, and for the current quarter, the last day of the first month. Within this period, you have to intimate for the QRMP scheme. Okay. And once you opted for this, year on year, you no need to say. This may be automated. Okay. No need to exercise the option for every quarter. Once QRMP scheme is exercised, then QRMP shall continue for future unless becomes ineligible for this scheme. What is the ineligibility? The moment he crosses the limit or the moment the payment is exceeding the limit 50 lakhs and all. Or he himself apps furnishing the returns on monthly basis electronic. Sir, I don't want this one, sir, I will go for the regular. In that case, he automatically comes out from the QRMP scheme. QRMP scheme. Now, option of QRMP scheme lapses when? Same 5 crores. 5 crores. So, the moment his aggregate turnover crosses 5 crores, succeeding quarter onwards, he has to go for the monthly basis. GST or 3B can be submitted electronically by registered person or CTP. Nil GST or 3B also be filed through SMS. Okay, there should not be any outward supply, there should not be any RCM basis, nothing should be there to file GST or 3B using SMS. And what are the contents in GST or 3B? GST number, legal name, tax period, outward supply and exempted nil, all the details what we have studied in GST 1, no, automated here, everything is available here also. Okay, this is the normal case. What about the GST 4, sir? GST 4 is for the composition supplier. All the details will be available here, but it is for the composition taxpayer. But for him, due date being 30th April from the end of financial year. So for him, it is not monthly or quarterly. For the composition taxpayer, he has to file only once in a year. That too, after the completion of the year, 30th April, 30 days is there. Okay, once in every year, 30th April. Okay, but what about the payments, sir? Payment should be done quarterly. For the composition taxpayer, he has to, their QRMP, monthly payment, quarterly return. For the composition, yearly return, quarterly payment. The quarterly payment being 18th day of the succeeding month. Okay. So while furnishing all the details available for the transactions and the person to whom everything will be available here. Regular taxpayer to composition taxpayer. I was a regular taxpayer. Now I got shifted myself from regular to composition taxpayer. Okay. Composition taxpayer. Now, due date for return relating the period prior to applying the composition scheme. You have to furnish your regular thing earlier. You are shifting from regular to composition taxpayer. Being the regular taxpayer, you need to file the returns as either QRMP or regular scheme. If you are applying the composition taxpayer, before that you have to finish up all the filing of the returns as per the regular taxpayer. And composition taxpayer to regular taxpayer. If you are shifting from composition to regular, the moment you shifted regular, finish up the composition taxpayer returns earlier, then you can go for the regular taxpayer scheme. Exit from composite. This is called exit case. And in case of NRTP, GSTR 5 will be applicable. For them, GSTR 5 will be applicable. And he has to file the monthly return. NRTP is similar to CTP, operates only for the 90 days maximum, extended to another 90 days. So he has to submit month on month. The month where his own operation stops, by the time he can file the return period, up to that period of cancellation. Okay, January, February, March 5th, his period is expired, validity is confirmed. For January he has to file, for February he has to file, for March immediately after the cessation he has to file. So monthly return in form number GSTR 5, last date of filing return being whichever is earlier of 13 days after the end of the calendar month. Here 13th February, for this 13th of March, for this 13 days after the end of the calendar month or 7 days after the last day of validity. Last day of validity is 5th March, you have to add another 7 days. 12th March itself you have to finish off filing your return in case of NRTP case. And payment of interest, penalty, fee, all the amount will be done by the time itself. Usually payment of tax will be in advance. CTP and NRTP we have studied in registration case, they have to pay the tax and based on rough calculation ahead of operations starting for registration, right? So here the due date of payment of tax is earlier, okay, prior of starting the registration itself. It's in shortfall. That shortfall will calculate and pay along with the interest before you close your business. And what happens are restrictions of error, rectification of errors and omission. Of course, you can do if it is being clerical error, like provided that last date being this one, 30th the date or annual return filing date. Now, Mr. Akash obtains registration under regular scheme. Under regular scheme, Mr. Akash obtains registration under regular scheme. He asks Mr. Mohan, his tax manager, to pay GST quarterly basis. However, Mr. Mohan advises Mr. Akash to pay the GST on monthly basis. You are required to examine the validity. Yes, of course. QRMP scheme, you can file quarterly once, but payment should be monthly once. Need to file return quarterly once, payment should be monthly once. Okay. Ms. Pragya, a taxpayer registered under regular scheme, files GST at 3B for the month of October on 20th November. Correct. After filing the return, she discovers that the value of the taxable supply has been underreported. What can she do? She can fill the amendment form in the next reporting date. So next means 20th October. While filing the GST at 3B in 20th October, November, December, okay, December, okay. In December, he can go for rectifying using the amendment table. And QRMP scheme, eligibility condition, where the ATO exceeds 5 crores, loses the eligibility. Option, when to excise already is completed. Validity also we studied. Okay. Tax due in each of the first 2 months of the quarter to be paid depositing on 25th of the succeeding month. One extra point. 25th of the succeeding month. But the fixed sum you can pay. 35% of overall tax payment you have to pay. Of the tax paid in cash in return for the preceding quarter. Tax paid in cash in the return for the preceding month. Okay, in case of monthly return, whatever it may be, at least 35%. Whatever the tax you paid in the previous quarter, previous quarter you might have paid around 10 lakhs rupees, and on that 35%, 35 lakhs, 3.5 lakhs you have to pay in using the electronic cash ledger. And interest, applicable interest we already studied, no, the same will be applicable here. Self-assessment method. Self-assessment method means on 20th GST at 3B you are filing, no, the file you do after paying the tax, it's not going to be verified, it's by done by yourself, that is called self-assessment method, that's all. Okay, if you are delaying, then interest will be applicable as per section 50. I no need to reteach that here. Whatever the things you already studied will be applicable here. Now, the time limit also we have studied already. It's repetition only. Already explained the QRMP scheme. Okay, not required. And IFF also I explained. For whom this IFF is available, QRMP scheme taxpayer. And when he is able to pay use the IFF for the first and second month of the quarter, the third month he has to go for the GST only. Quarterly filing of form GST at 3B date also we already studied. Okay. Okay. So now we'll have a briefing about other returns. Section 40 deals with the first return. What is called first return? Registered person can issue revised return. No, for him the revised return will be available only for the newly registered person from the date liable for registration to the date effect of getting the registration certificate. Because to facilitate him to accommodate the revised return, the first return format is pretty different. For him this will be applicable. Section 40, special provision. Section 44 is all about annual return. What is the due date for filing the annual return? 31st December of the next financial year. Okay, who are required to file the return? All except whom? The persons not required. No, already we studied under GST1, the same team will come here. CTP, NRTP, ISD, TDS, TCS person, OIDR scheme, they are not required. Point 1, point 2. C. Furnish the details of expenditure and income. Complete details. Your income expenditure for the whole year you have to file it because it's an annual return. It's not only supply and receipt. And prescribed form for annual return being GST 9, file electronically, GST 9A for the composition scheme supplier. Revision of returns. Can we revise this, sir? Of course, if there is any error or whatever it may be, you can revise, but all these things can be completed before the due date of filing of the return. Due date of furnishing the return for the month of September following the end of financial year. Okay. Okay. This one is not required. You stop here. Okay. And section 45 dealing with what? Final return. Now, why do I want to study final return? So, the final return is after the closure. So, you have to intimate the stocks available as on the date to pay the amount. That will be accommodated in final return. Filed by every registered person whose registration has been surrendered or cancelled. Time limit for furnishing the final return being 3 months. Final return has to be filed within 3 months of the date of cancellation or date of order for cancellation. Date of cancellation is voluntary, or the department may take actions on you to cancel. After the cancellation order, you can file within 3 months. Okay. Whichever is later will be taken. Now, what happens in case of UN, sir? UN should file the return under GST 11. Why he files? To claim the ITC and that to be encashable. Of course, there is no any output. There is no cancellation of UN number. So once you file, that's all. Okay, it's the filing is required to get the ITC in the form of cash. Now, section 46 is nothing but if you fail to file, you may be getting a notice from the notice to return defaulters. Furnish a return within 15 days. Okay. Now, if you don't file, then penalty will be leviable. Late fee is levied. Okay. If a registered person fails to furnish what? GSTR 1, GSTR 3B, final return, then whichever is lower of 100 per day and 5,000, okay, whichever is lower. Late fee levied for delay in filing annual return. This is what about the return other than annual return. This is all about final return. In case of annual return, 100 or 0.25% of turnover, whichever is lower will be the penalty. In case of annual return. In case of GSTR, this will be GSTR 1 and this will be GSTR 3B. This will be the final return. Okay. In these cases, 100 or 5,000. In case of annual return, 100 or 0.25% of the turnover. Goods and services tax practitioner, you can recollect from income tax practitioner, same like here. You will be given your own identification number, like member. Okay, CA and CMA after completion, you will get the member. No, similarly, once you pass the examination, GSTP, okay, you will get the GSTP registration number. Using that number, you can log in and you can file the returns for your clients also for your fees. Okay, you are responsible for that. And here you have been given in PCT. PCT is for the practitioner's form. PCT is the practitioner form. Disqualification, application rejection to be a practitioner. You applied for, but your application rejected. For that, there is a form, and all these things are available in PCT forms. And the eligibility condition should be, you should be if you want to be GSTP, you should be an Indian citizen, sound mind, not adjudicated as insolvent, not being convicted by a competent court. Okay, any other conditions. Okay, any other conditions. And you need to have the acquired qualification. You need to have these qualifications. Okay. And the enrollment as sales tax practitioner, old one, that's not required now. If you register as sales tax practitioner under old act, by default you will be the GSTP for at least 5 years. Thereafter you have to apply for regular formalities for the fresh GSTP. Okay. Then what are the activities? You can file the returns and you can pay the tax on behalf of your customer or client, and on behalf of the client you can file the eBay bill. Whatever the things the customer or client has to do now, you can do. That's all. You need to have the enrollment number and all. So the list of GST forms listed here, already we discussed now. You can skip those things. Let's see some practical questions. Mr. X, a registered taxpayer, did not make any taxable supply during the month of July. Is he required to file GSTR 3B? Taxable supply. Yes, at least he has to file nil return. Nil return mandatory by SMS. He cannot be without any return filing. Okay. If a return has been filed, how can it be revised for changes? Revision is not possible, but you can amend in the subsequent tax period, not in the same period. Mrs. Kevanan Enterprises, a registered supplier of designer wedding dresses under regular scheme, has aggregate annual turnover of 30 lakhs. It is of the view that in the current financial year, it is permitted to file its statement outward supplies GSTR 1 on quarterly basis, while its accountant advised it to file the same on monthly basis. You are required to advise. Yeah, of course, he can go for what? QRMP scheme. Quarterly scheme he can go, as his turnover is less than 5 crores. 5 crores. Okay. This you can cancel also. Answer you can cancel. Okay. Answer you can cancel, because earlier one it's 1.5 crores for the composition taxpayer. No. For that, this question was there. So in the case of composition, you can go for, but you can cancel this. You can, in the case of QRMP, new scheme introduced, you can go for the QRMP scheme also. Now, Mr. Kohli is a registered supplier in the state of Gujarat. He is filing GSTR every month. During the month of February, he went out of India and thus could not do any business transaction. He believes that as there is no transaction, there is no need to file GSTR. No, he has to file, but at least he has to file nil return using the mobile. Mr. Kalpesh is a registered dealer in Kerala paying tax under composition levy from 1st April. However, he has to pay the tax under regular scheme from 1st December. Is he liable to file GSTR 4 for the composition levy? Yes. Until he was being in composition levy state, he has to file the return under composition levy schemes requirement. Mrs. Jarina, a registered dealer in Rajasthan, did not file GSTR 3B for the month of June, but she wants to file GSTR 3B for the month of July. No. Unless he completes the filing of returns for the prior period, he cannot file the immediate previous period. Now, X has not made any outward supply during the month. However, X has procured certain input services. X is of the opinion that he can file nil GSTR 3B. He says, sir, I have not done any outward supply, but there is an input supply. Can I file the nil return? No. Any table, there should not be any table having any transaction. Okay, if there is any transaction in any of the tables like input or output, definitely he has to file the return completely. Nil return not possible. A is a chartered accountant in practice and is registered under GST. On a query regarding return filing process of potential client, A has represented him as a GSTP. Just merely you have the qualification, you are not being the GSTP, you have to apply for GSTP and get it yourself enrolled, else you are not eligible. A is of the view that since he is a qualified CA with a GST registration in the name of his proprietorship firm, he also qualifies. No. GSTP is a separate registration, he has to apply for the GSTP. Quick Tax, a GST return filing service provider, has asked its client to provide a scanned copies of the tax invoices issued to B2B customers. Do you want to issue the scanned copy? No. Only the key terms required, GST number of recipient and supplier and quantity, HS number, these things only. Field is enough, form scanned copy is not required. X Limited is winding up its business in Rajasthan. The tax consultant of X Limited has suggested that X Limited will have to file either annual return or the final return at the time of voluntary cancellation. Okay, in case of voluntary cancellation, final return should also be submitted, annual return should also be submitted. That's a separate one where you have the income statement and expenditure also in annual return. Final return is totally different where you have to quote your input stock available for refunding the ITC available, right? So there is no option, you have to file both. Clear?